Right. Okay. All right. So we have about 33 people. So let's get it started. This is Suman Chepuri. I think most of you guys have seen a bunch of my chat messages in the Trader Talk chat room on WhatsApp. So it's fun to get together, even though it's virtual, to exchange some more ideas and keep this interactive and fun. Just one request: if you're not speaking, please go on mute. That way, it's going to be a lot easier for the audio part. I hope you can all see my screen. I prepared about 10 slides, so planning to spend about an hour or so and keep some time for Q&A. That way, we'll keep the session not too long, but useful itself. Okay. So I can share some of these slides later on if you guys think it will be useful for you as a reference. So as I was mentioning earlier, I think we're at a very interesting point of time where the gap between the professional traders of Goldman Sachs and Morgan Stanley and all these guys versus an ordinary retail trader is actually very small in terms of information. Thanks to all these new websites and platforms like Twitter and semi-professional trading platforms like Thinkorswim, that gap is really short now. So we should make it a lot easier and more conducive for all of us to do this stock trading. It should be a lot of immense opportunity in the next few months. I think we've already seen the last couple of months the volatility a lot of us took advantage of. I for sure was pretty fortunate, made some good trades, and probably made more in 2 months than last couple of years, honestly. So it's really a great time, and I think the fact that we're all working from home is a huge advantage that we did not have earlier. So I think it's like the perfect storm to take advantage of these opportunities. So I'll quickly go over the table of contents. These are the main areas I wanted to focus on. Wanted to give a little bit of a trading overview. This is more like a trading 101 kind of thing, and a list of all my favorite tools and resources. I'll be happy to hear some of your thoughts, your favorite tools as well. And then I wanted to focus on short selling, so that we can basically take advantage of that. Okay. Give me 1 second. Okay. So, and then I have some trading principles, some of my favorite things to do, which of course I don't do all the time. I think we're all guilty of that. We know what is the right thing to do, but we end up not doing it. But I think, they'll be useful to share and hopefully it'll reinforce upon myself. And then some investment checklists. So this was an interesting checklist I found somewhere on the internet. So I saved it and added that as a slide. These are from, the really seasoned professionals with, decades of experience in investing and trading. So I think that will be a useful reference sheet. And then I have some abbreviations and jargons. I think we always get that complaint, you guys use a lot of terms and jargon that we don't know what the heck it is, so I thought that'd be useful. It's not an exhaustive list by any means, but I think it'll still help you because, when you're chatting and trading and trying to do everything at the same time, you want to be nimble and kind of use some of the jargon to convey what you're trying to do. Okay. And then we have some reading references. So if you guys want to read from the old-fashioned way of researching through books, I have a good list of reads which I found interesting and useful in the past. Okay. All right, let's go ahead and get started. I'll go ahead and make this full screen so that it's a little bit easier. And I'm going to try to switch between screens and share some of the portals and things like that I'm using to make it more interactive rather than just slides. So the first thing first, folks sometimes wonder what is trading and what is investing. In my mind, they're completely different things. Active trading, what we do here is basically buying and selling stocks for a short-term profit. Okay. It may not be everybody's cup of tea. I know there are a lot of long-term traders also on this call and in the chat room, which is fine. But, traders, we try to make 3, 5, 10, 15, 20% margins on each trade. So it's a lot higher than your typical passive investing, which is more a buy and hold kind of thing, or buying an index like a Vanguard 500 S&P fund or something like that for long-term gains. So it's obviously the biggest difference is the amount of time and energy you have to spend for active trading versus passive investing. Uh, Active trading is definitely not for everybody. You need to be able to spend that time and energy, and you also need to be able to, have that kind of acumen to be excited about, everything that's going on in the economic world, and be able to, take advantage of it. Because I know we all have jobs and we all have families, so it's not always possible to do everything at the same time. But just mentioning that, a couple of charts. Yes, I'm recording. All right. All right. And if everybody can please go on mute so that we don't have any background noise. Okay. So hope that part is clear. Trading versus investing. The second part is part of trading. Broadly, folks break it down between day trading and swing trading. And as you guys have noticed, we do a little bit of both in our chat room. I would say about 80% of them are day trading because you have opportunities that come and go, come and go. But then there are people like me who are a little bit more on the swing trading side. I usually like to hold a stock for multiple days, sometimes weeks. So that is a big difference. Okay. So if you're doing multiple trades on a daily basis and typically don't hold a position overnight, which is very much like Govind style. Govind, are you on the call? Hope you are. So he's an excellent day trader, as you guys know. He tries to hold very few patient positions overnight, and that makes a lot of sense, especially in a volatile market like this, because you wake up tomorrow morning, the market might be down 200 points or 500 points or up 500 points. So if you're on the wrong side of the trade, of course you're going to get hurt. So that is a big advantage of not having to hold overnight positions. But swing trading is a little bit in a longer term, few days or a couple of weeks at most, and that is more to do with riding the trend, you know. And we'll talk a little bit about that and sector rotation and things like that because most of the trends last for multiple days and weeks. So if you can identify the right sector, right stock, right trend, then you can basically just let it go. You might have a couple of blips up and down, but overall, as long as you're riding the trend the right direction, you will make huge gains by the end of that swing trade. Okay. And then another important rule is the PDT rule, which stands for the patent day trading rule. Okay, so this is a SEC regulatory designation for traders or investors that execute 4 or more day trades within 5 business days. Okay, so obviously, everybody would be a patent day trader if you are actively trading. So there is a very easy way to get around it. You basically have to have a minimum equity requirement of $25,000 in your account. And I think most of the folks who are trading actively, you got at least that much in your account. Okay. And the next thing is margin trading. Okay. So this is a very important thing. This is basically margin means you're borrowing a loan from the brokerage firm. Okay. And you need margin trading, especially if you are planning to do any short sale. Okay. And the way it works is once you enable margin, you'll have to talk to your brokerage firm, whether it's TD Ameritrade, E-Trade, whoever it is. And sometimes you can do it online. So whichever way you want. Once you have that enabled, the biggest advantage is that the broker will let you borrow 1:4 amount of money. So if you have $25,000, they'll give you buying power for $100,000 for day trades. And if you want to keep it as overnight swing position, then it becomes a 1:3 ratio. So for 25,000, you'll get $75,000 buying power. So that is an example I'm giving for TD Ameritrade, which is, the largest one, obviously. But some of the other brokers, like Interactive Brokers, they give even more margin. I think they give 1:6 or something like that. So some of you are on IBKR, which is Interactive Brokers, will probably know that better. Okay. Now, margin is, of course, very useful because it gives you that extra buying power. but some important key pointers to remember. Okay, first thing is my advice is don't use margin on a routine basis. Okay, because then you get used to it, right? You're forgetting that you have only $25,000 in your account. You're trading like you have 100,000, and what that obviously does is exposes you to unnecessary risk. Okay, and if the market goes down the wrong way, for example, you're leveraged for a whole $100,000 and the market goes down 5% and your portfolio goes down 5%, guess what? You lost $5,000, but your actual equity is only $25,000, which means 5,000 down on a 25,000 account is you're down 20%, okay, not 5%. So if you're down 20%, you might get a margin call. Okay, and what a margin call means is the brokerage typically gives you a certain amount of time. They typically give you a potential margin call warning, and after that, they'll give you like 24 hours, and they will basically sell your stocks for you to make sure that they get their money back, and which is their margin loan that they're given you, and make sure that they are not exposed to unnecessary risk. So you could be liquidating stocks at the wrong time when the market may be getting ready to bounce tomorrow. Okay, so be careful about using that. The second thing is remember that there are some restrictions to margin. So if it's a highly volatile stock, for example, like Tesla, okay, they will not let you use margin for that stock. So you will have to use a dollar to dollar buying power for something like that. And same thing goes with leverage ETFs. Okay, we'll try to spend some time on leverage ETFs if we have time, but I think we're all very familiar with some of the popular ones that we use. For example, TZA, which is a bear 3x bear ETF for small caps, or FAZ, which is a bear 3x ETF for finance, and so on, right? So they are already leveraged 3 times. So obviously, if you use margin on top of the leverage, you're basically going like 9 times or 12 times. So that would be like too much exposure for these brokers. So they don't want you to do that. Okay. And then the other thing is, as I mentioned already, if you want to do short selling, you have to have a margin account. It's a requirement. Okay. No broker will let you do any short sales without a margin account. And then, of course, the reason the broker is giving you margin is because they want to make money on it, right? So they charge interest. And it's very important to negotiate a good rate. Anything under 5% in my mind is a good rate. I was able to negotiate 4.1% with TD Ameritrade after making a few calls, talking to supervisors and this and that. So you got to do what you got to do. But obviously, if you're, taking a large chunk of margin, you want to minimize your interest rate. And so then last. Yeah,
one
go ahead.
Question: do you know what is the standard? Because I wasn't sure. We have to call them to negotiate the margin.
There is no standard. Every brokerage can charge whatever they want.
Okay. And is there there must be a way to check
shopping mortgage? If you're buying a house, you'll have a whole lot of variety of rates, right? Just like that. Okay. So a lot of people don't realize that. That's the reason I put it in here.
Oh, thanks for letting us know. Okay.
Yeah. And if you log into your account, there will be some place where you can see what your current margin rate is. And typically what they do is there will be a base rate. Okay. For TD Ameritrade, I think the base rate is like 9% or something. And then they will say, I will give you a 4% discount or 5% discount on the base rate because, you're an active trader, you're parking, a large amount of money with me, and so on. Okay. They want you to stay as a happy customer. Basically, that's the bottom line. Okay. So it's like anything else, you got to negotiate.
One more question on PDT, pattern day trader. We are all pattern day traders from what I understand, right? Most of us are doing more than 4 per day and have more than 25,000.
Exactly. But most of us probably have more than $25,000. So we have nothing to worry about.
Oh, it has to be below 25, is it, for a pattern day trader?
Yes.
Oh, okay. You should have written then a maximum equity requirement. Sorry, I got it wrong. Okay. So we are not pattern day traders then?
No.
Okay.
Yeah. I mean, pattern day trading is a flag that they stick on you. So basically, if you have less than $25,000 and you do more than 4 trades, they'll freeze your account.
Oh, okay. Got it.
Okay. So the way to get around it is by putting enough money there. Okay. And then one other interesting thing that a lot of people don't know is this interest on margin is charged only for overnight positions. So say you have $25,000, you're borrowing $100,000 during the day and exiting all your trades by 4 p.m. Eastern. You're not paying a single penny of interest. So it's a beautiful thing. It's like you're getting free leverage without paying anybody anything extra. Okay? And if you keep the positions overnight, obviously they will charge you interest. Make sense? Cool. All right. If you don't have any more questions on this slide, I'll go to the next one.
Suman, a question for you. Like when you
Yeah.
said by before 4 p.m., right? You have to close it. So like, they have some extended hours. Like how does that work when there's extended hours? So you
So
try
it
to
kind of
calculate.
it varies by broker. The rule of thumb is if you don't keep it overnight. So I think if you get rid of them even during extended hours, it should be okay. But I would call the brokerage to verify that. Okay? So that kind of goes into the gray area, right?
Okay.
Okay. And you have to
And
remember,
based on
these
your
days,
experience.
brokerages are not charging any commission. Everything is free. So they may not want to be flexible on these things because they want to make some money, right?
Yeah.
Okay. So, but again, that is something that I would say you should call. TD Ameritrade used to be 4 p.m. I have not actually checked with them. It might still be the same or not, but even if it is a little bit of interest on a short amount of money, remember this is 5% annual. So the amount of interest you'll pay on a daily basis is a few pennies, maybe $1. So it's not a big deal. Okay, of course it depends on the amount you're borrowing, but shouldn't matter a lot for most people. Okay, because the bottom line is don't be penny wise, pound foolish, right? If it makes sense for you to hold a stock for one more day to make, maybe another 5% on that trade, you should rather do that than, try to skimp on a couple of bucks of interest, right? So that's all I'll say.
Suman.
All right. Yes.
Just a general, a lot of these brokers, right? The business model seems to have changed dramatically. There are no commissions, and you just mentioned even the interest rates are fairly small. And
not if you don't negotiate, they will be high.
Right.
Most of them, the default rate will be around 10%.
Right, and that is for the margin. But is that currently the main bulk of their revenues are through managed accounts and the management fees they charge? Is that pretty much all they do?
Yeah. Actually, on the next slide, I talk a little bit about it. So let's go there. That way, you can see. So there's a third bullet over here. How to choose a brokerage. So brokerages now make money on margin, on options. So option contracts, the fees are pretty much the same. I don't think they've gone down. So you pay per contract. So, they make a decent chunk over there. And then ADRs. ADR stands for American Depository Reserve, I think. It's basically any foreign stock that is traded in the New York Stock Exchange. So, for example, the Chinese stocks like Baidu or Alibaba or Neo, all of these are ADRs, okay? Or even one of the Indian companies like TCS or Wipro. So if you trade ADRs, there is a commission fee involved, okay? But I think most of us rarely trade ADRs, so it's not a big deal. But those are some of the ways that brokerages are making money. And definitely, they are having a tough time making money. And that's why all the stocks dropped tremendously earlier in the year, when they all went to $0 commissions, right? And those of you who've been active probably know why it all started. It's all because of this one company called Robinhood. So Robinhood started about 2 or 3 years ago. They were the first firm to start offering no commission trades. And they stole business tremendously from all the big guys. And the big guys obviously got worried, they've been losing more and more customers and they would become more irrelevant. And obviously the current customers kept asking, hey, are you going to drop your fees or going to zero? So they kept dropping the fees over the last 3 years. Ameritrade, for example, used to be $9 per trade. Then they went to 7, then they went to 5, then they went to 3, finally went to 0. Okay, so it's a very good thing for us consumers. As retail traders, that's another great thing for us, because previously day trading was pretty expensive because you would rack up huge fees on commissions. Now you don't have to worry. You can trade away as much as you want. Okay.
Suman, is it possible that they're buying for example, say you're buying a stock for $10, okay?
Yeah.
But they may show us the Ameritrade, for example, a $10 price they may show as 10.1. So that 0.1 they may take that as commission.
No, that's illegal.
That's illegal. Okay.
Yeah. And first of all, it is not Ameritrade that is paying those prices. That data is coming from a clearinghouse.
Okay.
So there are third-party clearinghouses and the stock exchanges themselves, like the NYSE, NASDAQ, and so on. They are the ones who are actually matching these bids and prices, and everything is computerized. Okay. So they can't really manipulate. That will open a lot of lawsuits, and that is totally illegal. So, okay. So quick tips on choosing the right brokerage. First thing is make sure it's US based, because all US based trading firms are SIPC insured up to $500,000. Okay. And someone with a solid track record. And the reason I say a solid track record is, remember I was just mentioning about Robinhood. Robinhood started great. They were the first ones to offer $0 commissions. But if you've been watching the news, especially in March, when we had all these market crashes, up 10%, up, down 10%, all day, market getting halted. Guess what? The Robinhood systems crashed. Okay. And they were not able to complete the trades. And if you are their customer and trying to execute a trade, trying to get out of the trade because you see the market crashing and your system is freezing, I mean, you would be mad as hell, right? I would be. So, it's a good idea to go with one of the big guys. It's a huge difference for that reason. And in fact, even some of the big brokers had problems. Like recently, you guys saw when oil went down to minus $37, the May contract last month. So that was all over the news, right? Oil prices went negative. And at that time, Interactive Brokers, which is a pretty established company, they didn't have controls, and they're not allowing bids with negative prices. So if oil was trading at minus $5, you couldn't put a bid for minus $4 or minus $6. Okay, whether you wanted to buy or sell, because the system was never designed for negative prices. It's a very weird, odd situation, but that resulted in actually a lawsuit against Interactive Brokers. I think they're paying out like $100 million or something for losses. So, there are two problems, right? One is you're trying to liquidate a stock to minimize your losses. You couldn't get out. And second side is opportunity cost. You could be one of those people who wanted to buy at 37 and then wait for it to bounce. You lost that opportunity. So both ways it sucks. So, it kind of goes back to my second point of reliable technology. Again, these things can technically happen to anybody. I know it is not easy to predict which platform will go down, but someone like Ameritrade, they have 3 platforms. They have the web portal, and then they have the mobile app, and then they have desktop. And the mobile app is pretty solid, and the desktop version, which is Thinkorswim, is basically a separate platform by itself. So if one portion of the, you say the website goes down or the mobile app goes down, you can still use Thinkorswim, and Thinkorswim has its own mobile app as well. So Ameritrade basically has 2 mobile apps, okay, and 1 web portal and 1 Thinkorswim desktop. So with 4 channels, chances that you're going to have problems in all 4 are very low. So I prefer sticking with them. And there are a lot of other good brokers too, but I'm just giving an example. Okay. I see a couple of chat messages.
Suman, any comment on E-Trade? I and a few of my
E-Trade
friends are
is pretty
addicted.
decent. Yeah, I've heard good things about it. You know, uh, okay. Chakri was mentioning that BS trade for today, Ameritrade is 10%. Yeah, that's what I was expecting. Yeah. Fidelity, I don't know much about Fidelity, so I don't want to comment. If somebody, the only thing I've heard about Fidelity is the UI sucks. I don't know if it's gotten any better. I don't think they have a very good mobile app and all that stuff. E-Trade, I would say their app and interface and all is on par with the TD Ameritrade is what I heard. But there are a lot of other small companies too, which are, good. And remember, one of the things you can do is you can have multiple brokerage accounts. It doesn't have to be just one. Okay. So you can have, 25 grand in one account, 25 grand in another account. Of course, that adds to the complexity. Now you got to trade on different platforms, which I don't want to. But if you really want that kind of diversification, go for it. It is one option you can do. Okay, so an extension of that is basically trading platforms. As you guys know, the three basic ones are desktop. That is usually the platform of choice for all active traders who do multiple trades a day. The reasons are pretty obvious. It's full featured, it's fast, you can have multiple screens, charts and all that good stuff. It's very robust, right? The second favorite for me is a mobile app. Very useful when you're on the go. The user interface, I think, is actually better than some of the desktop tools, especially because mobile apps are fairly new. They've all been developed in the last 5 years or so. So there's a lot of emphasis on usability when it comes to mobile apps. Desktop, most of these tools are 15, 20, 30 years old. And, of course, they continuously improve it, but they don't really have a huge makeover. Whereas the mobile apps, they're a lot more nimble and easy to use, in my opinion. And then you have the web, that's more of a backup option in my mind. But it's required, for some of the detailed features like, calculating your gain loss, tax forms, margin, things like that, so it's got its place. Okay. And then the third category in my mind for this section would be information. Now, how do you get your information? Okay. Uh, something I didn't mention here, but it's, I think, obvious is being in an active trader forum like our WhatsApp chat group, because that really, it's a push mechanism, right? It's coming to you. So it makes it very convenient for you to get the information. Okay. And then the obvious ones are watching one of the top financial channels like CNBC. I've tried looking at Bloomberg and Fox News for a little bit, but I never, liked it as much. And CNBC is a market leader. They have a 90% market share among the financial audience. So why bother looking at anything else, right? And why watch these? Obvious, I basically have a separate TV in a corner of the room, so just keeps going on. You listen to the, CEO interviews, analyst interviews, market commentary, analysis, breaking news, all that good stuff, right? So you need your source of information. And the second most important, which arguably could be one of the most important, is Twitter. Okay, Twitter has really changed the game for stock traders in the last 5 years. Okay, all the top analysts, all the market commentators, breaking news, analysis, everything is on Twitter. The key thing is following the right people so that your channel is not getting crammed with junk, right? And you guys have probably seen the corner of my room, of my um, screen. You were seeing some tweets coming across. That's how my day is. It's a Saturday afternoon, so there aren't many tweets going on. But on a weekday, believe it, that corner is lighting up every few minutes, or if not every few seconds sometimes. So there's constantly, information that's coming and gives you opportunities to act and make your decisions and trade accordingly. Okay. The next one is economic calendar. Okay. I will click on it just to show you an example. So the one I like watching is the Market Watch Economic Calendar. It gives you a list of all the key things that are coming up. Okay. Like the Fed minutes, the business index, CPI, the consumer price index, Like for example, every Thursday morning, 8:30 Eastern, this is a big thing, right? Especially these days. What are the jobless claims? Okay, and it gives you what is period. Okay, so which month, what was the forecast, and what was the actual, and what was the previous month. So very nifty. One stop place, you can see all this data. Okay, same thing, retail sales. That was a big number that moved. And some of it is clutter. Obviously, you don't know which ones are important, which are not, and that comes from experience. If, for example, CNBC is showing it as breaking news, it's probably important. Okay, so that's one way to know. And same thing, you'll have next week. Next week it's a little bit quieter. Not a whole lot going on. They have the home builder index, housing starts, permits. So for a typical week, it is pretty quiet in terms of economic news, and that is because of the long weekend that's coming up. Okay, we got Memorial Day weekend starting, so that's the reason things slow down. Okay, and then the week after again, it will really pick up. So for example, look at the Chicago Fed's Charles Evans speech. So people want to hear, hey, if somebody is on the board of the Federal Reserve, what are their thoughts? Okay, I think I mentioned this in the chat. Chairman Powell, the Federal Reserve Chairman, he's going to be on 60 Minutes tomorrow night. And you guys know on Wednesday when he spoke, that moved the market. He was not, you see this? Wednesday, May 13th, Fed Chair Jerome Powell speaks. So that moved the market. Traders want to know, what does a Federal Reserve Chairman think about all this? Is this something that's going to be a quick V-shaped recovery, or is it going to be a W? Is it going to be long? How much pain? What does he think? So that was a big factor. Okay, so economic calendar is pretty important at times, and I try to keep up with it. So something from the chat. Okay, someone said Fidelity is horrible. I think kind of reflects what I said. I think it's meant for long-term traders, not active traders. And news Benzinga, yeah, I listed that. If someone has subscription to Benzinga Pro, definitely please be active in the chat group. A lot of good stuff comes to that. So E-Trade is good. T-Trade is better for options. So yeah. So Chuck is one of our active options guys. So I'll take his word. I think definitely a good platform to look at. Okay. What happened?
Suman,
Go back. Yes.
one question on the trading platform side of the things.
Mm-hmm.
So all of you who are fairly high frequency traders, right? As soon as you buy, do you have an option to immediately put in a stop loss sell order? In other words, basically in one go, you buy and at the same time immediately follow with the sell order, or you do them separately?
Yes. So TD Ameritrade lets you do that. You can do it in terms of percentage, for example. So you can say at whatever price I bought, if the stock drops, say 4% below that price, automatically trigger the stop loss and exit the trade. Okay. So you can do that. So you just have to learn how to set it up. There are tutorials and videos and all that. You can probably even call the tech support if needed. There is a way to do that, but it has to be, something absolute. It has to be a dollar amount or it has to be a percentage. And the thing is, it is not easy to pay a constant number for everything. For example, if you are playing with a leverage ETF, let's say TZA, we all know stocks like TZA or TVIX, they move huge ranges every day. Okay. So if you put a stop loss at 2% or 3%, you'll get stopped out in no time, unless you have perfectly picked the trend to go in the right direction. So you might get stopped out unnecessarily. So I typically have wider stops for leveraged ETFs and smaller stops for regular stocks. So it depends on the beta of the stock, how volatile is the stock. Microsoft is not going to move 5% in half an hour. Okay, so you don't have to worry. So Microsoft, a stop loss at 2% is fine. Okay, but that may not apply for someone like Tesla. Tesla is very volatile. So it depends. Okay.
Okay.
All right. Some of my favorite research tools. I think you guys are familiar with TradingView. I covered it in my last session. TradingView is really nifty, for charting and technicals. I'll just go there for a couple of minutes so that I'll show you. It really saves me a lot of time in two ways. Okay. And again, they always have a free version and a pro version. The pro version obviously will have more features. I'll just look at the S&P, for example. I just clicked on S&P and I can just click on technicals. Okay. And it will show me all the moving averages, oscillators, everything. And I'll tell you when is a buy signal, when is a sell signal. Okay. Again, it depends on your time horizon, right? For active traders, like a 30-day moving average or a 20-day moving average is important. So you'll look at those. For more long-term, you look at 50-day or 100-day or even 200-day. Okay. So you'll have the different levels and action, So again, remember, the stock market or the stock will do whatever it wants to. Okay. All the technical analysis is only giving you a frame of reference. Okay. Of what the stock might do. And a lot of times, the stock does follow the technical indicators, which is why they are relevant, right? For example, I think a couple of days ago, I predicted that the market would probably hit to 2,800, and it bounced exactly at 2,800. Okay, and then the next stop was 2,780, and it bounced there. It is good to know those reference points because, for example, if I want to cover my shorts, I'll be looking to cover right around that level. Okay. And if I want to flip and go long, that would be the level I would be flipping. Okay. So it's always relevant. And because I'm looking at these numbers like thousands of other traders and algorithms, the chances of that happening are pretty high. Okay. So that's why these indicators are important. Okay. I could spend hours just on TradingView, but we'll continue with the deck. Okay. The next one I like is FinViz. Okay. This is one of my favorites too. Really handy, for all kinds of metrics. I'll show you an example that I just saw yesterday. So yesterday, if you guys notice, I'll show you my Thinkorswim screen for a second. So I have, this is my watch list right on the left. So if you look, I have a few gambling stocks that I'm following, right? You have LVS, okay, Las Vegas Sands. You have Penn Gaming, which is like the slot machines company. And then you have MGM. And then you have Huya.
Are you sharing anything?
Can you share the screen, Suman?
Oh, really? You can't
I
see
think
it?
you're on a different screen.
Oh, sorry, Venkat. Can you guys see now?
Yeah, we can.
Okay, sorry. I'm glad you mentioned. I think when I switched my screens, it didn't want to show the other apps.
So what is this screen? What is this app?
This is Thinkorswim.
What is it? Sorry.
Thinkorswim.
Okay.
Okay. Remember, this was the platform that I told TD Ameritrade uses. So this is the one that I use. This is a desktop tool. Okay. So the example I wanted to give was this gambling stocks. Okay. So you have LVS, Las Vegas Sands, Penn, which is like a slot machine company, MGM, and then Huya, the Chinese online gaming company, right? So I was looking at them, and then I suddenly saw Huya, as I think this thing is going to do very well next week. So that's the reason I got long around 15. Then the big difference I saw was between the casino stocks like LVS, MGM, and Penn. Why did Penn shoot up 9%? Okay. So then what I did was I basically went to FinViz. Okay, you guys can see FinViz, right?
Yeah, we
Yes.
can.
You guys can see that?
Yeah.
Okay, good. All right. So then I started seeing, hey, what's going on? What happened? And then you start seeing this news. Okay, so it's beautiful. I love the way they display. So they have all these candles. Okay, and then they have all these key metrics of a company. Okay, one of the things I like to look at is what is the short float. Okay, what percentage of the people are shorting the stock? So you can see about 18% of the people are shorting the stock. That is pretty high. Okay, typically short floats are around 5%. 95% of the people are long. Okay, so a lot of people betting against this company. Okay, so that is one metric to look at. Okay, and then you look at what else is going on. Okay, I can read this article, but this article came, I think, late evening, see 3:55 p.m. yesterday. So when I went there first, I didn't even see any news, like what is going on. And then I scrolled on all the way. Okay, they have insider trading. Okay, so look at this. Jane Sketetti, she's a director in the company. And on May 13th, she bought stock shares worth of 37,000. Okay, $50,000. But the one which was bigger was Jay Snowden. He's the president and CEO. He bought $500,000 worth stock. Okay. Now, insider trading is people using their personal money. Okay. If the president and CEO thinks the stock is a good time to buy and put $500,000 of his own cash, guess what? I'm going to believe him and I'm going to buy it too. Okay. So that's the reason, the stock popped. Okay. The other thing I like is, they have a nice little summary of what the company does, a quick paragraph. It's a quick way to find out what's going on. And the other thing is they have integration with StockTwits. StockTwits is this third-party, message board. People will put whatever they want, so they'll have a lot of junk. But sometimes you'll find an interesting nugget or two to read what's going on. So overall, it's one of my favorite portals.
So when a president or CEO buys a stock and you follow the trade, right? So how long do you, or what's your metric to decide how long you're going to keep versus sell it?
Yeah, so that again, price, volume, and all that stuff, right? You look at breakout levels. So that becomes like a whole different discussion. That is basically how to, actually time the trade. So I think that will take more time and experience to learn, honestly. But the simple thing is, look at the price and volume. If the price and volume are showing that there are more people buying the stock and fewer people selling the stock, and the price keeps going up, why do you want to beat the trend, follow the trend? Okay? And there is something called a 2-day rule with stocks. Most of the stocks, when they make a big move, they follow that move for at least 2 days. After the 2 days, then the chances of reversal are higher. So if you're on the right side, you definitely want to wait for one more day before selling. So this rally started on Friday. So
Suman,
yep.
We're looking at the Google Docs.
You're looking at the slide, you mean?
Yes.
Yeah. I didn't switch it actually. Yeah. So basically, this trend started on, the 9% pop started on Friday, right? So that's day one. So I would keep it for one more day. Okay. But actually, it actually started, I think, the day before. I think this is May 14th. So maybe it is already 2 days to look at it closely.
Suman, on something like this, do you know this stock for a while, or this is something just new that you're picking up? I'm just trying to understand your familiarity with the stock and the confidence that you have in placing a bet one way or the other.
Yeah, so I am familiar with Penn Gaming. Penn, it's an interesting segment, right? It is part of the casinos segment, but it's not a casino. They provide all the slot machines to the casinos. Okay, so they do all the maintenance, servicing, everything for the casinos. So obviously it is related to casinos because the casinos are closed, these guys are screwed. But when the casinos are opening, these guys are going to do well too. Okay, and one other thing I like about Finviz is the sectors. Okay, so you see it nicely breaks down. Okay, now if I want to see all the competition, or rather everybody else in this sector, I can see nicely, easily. Okay, Void Gaming, Century, Caesars, Eldorado, Golden, Hilton, Las Vegas, Giants, MGM, Monarch, Melco, Studio Cities, Whale, Penn Gaming, Marriott. So they even put some of the hotels in there because there are hotels which also have casinos. It's a very nifty way to do it. And then I think I mentioned this also a couple of days ago, the screener. The Finbis screener is very powerful. So you can click on screener and basically, it's a very, very detailed search that you can do. And, of course, you need to know how to use the search criteria and all that. But once you figure it out, it's a great way to, scan for stocks and all that.
This was the scans that you were talking about, right?
There are scans in every tool. Okay. So even Thinkorswim, there is a whole section for scan. You can scan all kinds of things. There are all kinds of parameters. How much, look at all these parameters that there are. It's insane. And you can keep adding parameters too. You can keep adding, you can delete. You can have 100 parameters and do your search and come down with a list of stocks that meet your criteria. So again, a lot of those things come with experience. Even I'm not very good with scans. I stick to what works for me, and that's usually good enough for most people. And remember, there are 10,000 stocks trading every day between New York Stock Exchange, NASDAQ, the CME, the Chicago Mercantile Exchange, and everything else. OTC, which is over the counter. So there's a lot of options. So nobody needs to look at everything. Okay. So going back. All right. Okay. Let's get back to this. So again, part of research, I like breaking news for Benzinga. And if you have the pro version, you get alerts for whichever stocks you're tracking. So that's good. Might be worth paying a couple of bucks for that every month and getting it. It could save you a lot of money in the long term. But I don't feel a big need for it. And then the other one I like is the CNBC sector rotation. Okay, this is a very simple way to look at what's going on. I think I shared this also recently. So there are 11 basic sectors in the market. Okay, consumer discretionary, consumer staples, energy, financials, health, industrials, materials, real estate, technology, communication services, and utilities. Okay, and based on all the stocks in the S&P 500, they track all the sectors. Okay, so you can see, where the money is coming in, where the money is going out. Okay, so you can see energy is still a dog, financials are still lagging. Okay, industrials are also very weak. Okay, real estate is also weak, obviously for reasons we know. Utilities are also not that great, but utilities tend to go up when the market goes down because they become a safety haven, because of the dividend and all that. So the strong sectors, obviously technology. I think we can all count the number of days technology stocks have gone down in the last couple of months. They've been like a beast, 90% up days. Material stocks a little bit better, and that's a little bit to do with all the Federal Reserve money printing, right? Because they think the dollar is going to get weaker. So gold, silver, they have all been going up the last couple of days. Healthcare sector, of course, been on fire. One of the biggest beneficiaries of COVID is healthcare. Consumer staples, these have been going up because everybody's just eating at home, right? Consumer discretionary, these are most of the retailers, clothing and all that, they got beat up really bad. They're showing a little bit of sign of life because of reopening. Okay, so you keep track of this on a daily basis, and you can clearly see where the sector rotation is. And sector rotation, usually you can get a confirmation if it happens for at least 2 days. Okay, for example, on Thursday, all the banks bounced, right? Wells Fargo and all these guys bounced. Was it Thursday or Friday? I can't remember. But then they fizzled out the next day. So, it was not really a sector rotation. It was more like, somebody making a bet that, okay, we are bottomed on financials. But I think that's not the case. There's still more pain to go.
Suman, how do you use the sector rotation? Are you trying to get out of the sector when it rotates out?
Anything, right? For example, if you're betting, if you want to buy Wells Fargo, do you want to buy it when all the financials are going up or down? Obviously up, right? Because you don't want to be betting on one stock that you think is going to beat every other stock in that sector. That's very unlikely. Okay? There are exceptions to that rule. For example, Nvidia on Friday. Unbelievable. The whole semiconductor sector was going down on Friday. Nvidia was the only one that was going up. Very strange.
Yep.
You know, but that's okay. But you would rather be safe than lucky. Okay. So same thing. You know, would you want to buy real estate when all the real estate stocks are going down? Probably not. Same thing with energy. You know, and energy popped again. You know, last week was decent because oil bounced back. But you know, cyclically, energy is still going down because energy demand is never going to be coming back up pre-COVID levels anytime soon. Okay? Very few of us are driving, very few of us are going to work, you know, very few of us are flying, so you know the story. Okay? So sector rotation is pretty useful there. It kind of helps you as a confirmation that you're betting on the right stocks in the right trend for the sector. All right. All right. Let's get to short selling. Okay. Oh, it's almost been an hour.
Yeah. Before we move to short selling, I mean, can you throw some light on the taxation aspects? I mean, I know that you guys are individual traders, and I don't know if you're paying taxes on individual stuff. What is the advantage or disadvantages between being an individual trader versus kind of creating a capital structure or a corporate structure to it, kind of creating multiple LLCs and creating a C corp on top of it so that you can transfer 30% to a management fee and have these LLCs, I mean, wherein you can actually, I mean, instead of having those losses capped at 3,000, basically you can now actually treat the whole losses in the same month or in the same year, and you have a tremendous taxation advantages over there, isn't it? So, how do you kind of, I mean, if you are an active trader, and obviously there's a lot of chunk of money that you are that taxation plays an important role. So, do you have any advice on that? I mean, or I haven't heard anybody speak on that.
Sure. Good point, Sri. Honestly, I'm not an expert in that. I have thought about it. Again, you know, this timing, you know, everything happened so suddenly, right? Before March, I was probably trading once or twice a day because I had a full-time job. I was, you know, in the office, you know, 9 to 6, whatever, right? Like everybody else. So it was never a necessity. But yes, if this is something I want to probably do more seriously, you know, going forward, I would look into all that. It makes a lot of sense. Yeah, I mean, you can write off expenses, capital gains taxes go down, all that. Yes, you're right. All those benefits will kick in. Of course, you know, that will require some thought and paperwork and talking to a good CPA and all that good stuff. So obviously, I'm not that right person to give you that advice. But if you find out anything, let me know. I'm definitely interested in looking into it, you know, now that things are getting interesting.
Okay. Yeah, the way that I know is when people kind of incorporate multiple LLCs or kind of LLPs.
Yeah. Maybe we can do a separate session on that. I think we need a deep dive.
Yeah, under a corporate.
Yeah, I think we need to, you know, let's talk offline and maybe we can do a session and.
No, I'm not an expert at that, and then
I know. But if you know somebody who has done it, you know, maybe we can invite them as a guest speaker and help us out and give us the contacts of the right CPAs and you know, did they use LegalZoom or some attorney or you know, how did they get all that, you know, LLC and all that structure set up? But it's a definitely great question. I would like to learn about it.
Okay. Yeah.
And Govind and Shekhar are probably looking into that too. I'm sure they'll also want to learn. All right.
Okay.
So let's get into short selling. Okay. I think this is what a lot of people wanted to learn about. You know, you know, for better or worse, I tend to make about 70% of my money from short sales. It's just been, you know, sort of my knack, and it's been working for me for many years. So, you know, like everything else in life, you know, we stick to our expertise, right? So I want to stick to this. So I think short selling is still a little bit confusing and mysterious to a lot of people. So I'll try to explain it in as simple way as I can. Okay. So the simple way to sell it, explain short selling is you sell high and buy low. Okay. Now that doesn't make sense, right? How can you sell high? You always sell. You need to buy first before selling, right? That's what you're probably thinking. So interestingly, no, you can actually sell before buying it, and that's how short selling works. Okay. So as the chart shows, simple way. So say some market is going down, okay, by 200 points. So what you do is you sell the market here for 100 shares. And then once it goes down 200 points, you buy those 100 shares. Okay? And the difference is your profit. Just like how you would buy at a lower price and sell at a higher price, you can do the reverse. Okay? Now the terms are slightly different. Okay? So you say you sell high. When you sell high, you say sell short. Okay? That is the term that you use. Okay? So when you say you're shorting, you're selling short. Okay? And then when you're covering, what your meaning is you're buying it to cover or buying low. Okay? This is for any equity. Okay? So this is the traditional way of doing it. The other way of doing it is buying a bear ETF. Okay? What a bear ETF is like, FAZ, right? That's the inverse for financials. PZA, that is an inverse for small caps. So you can buy that. And that you simply buy low and sell high, like anything else. So if shorting is confusing for you, you can just buy a bear ETF. Okay? You cannot buy a bear stock because the stock can either be, bought low and sold high or the opposite. Okay? That's the basic thing. And this diagram explains a little bit better on how the whole mechanism works. So step one is, so you are the short seller, okay? You are the trader in the middle. And the broker is on the left, okay? Broker is, say, someone like TD Ameritrade. So first thing you're doing is, the broker is borrowing 10 shares of stock ABC to the short seller, okay? Say you want to short sell 10 shares of Netflix. So what you do is, you sell it first by borrowing the shares from the broker, okay? Because you got to sell something, okay? So where you want to get the shares from? You borrow from the broker, okay? And then you go to the market, okay? Which is basically, say, New York Stock Exchange or NASDAQ, which is all, part of your tool. And you sell those 10 shares, okay, at 500 shares, okay? Instead of ABC, say it's Netflix, okay? And then the portion of the trade happens, right? The stock either goes up or down, okay? In this case, let's expect that Netflix went down. Say it went down from $500 to $400, okay? And that's when you, the short seller, the trader, decide, okay, this is the time I want to cover or buy the Netflix stock back. And what you do is you buy these 10 shares of Netflix at 400. And then what you do is, once you buy the shares, you return those 10 shares back to the broker that you borrowed earlier. Got it? So normally, when you're doing a long sale, only this portion on the right side is applicable. But when you are doing a short sale, the portion on the left side also, borrowing from the broker and returning the shares back to the broker is involved. Okay? And you obviously, as a trader, get to keep that $100 profit per share. So you made $1,000. Does that make sense?
Suman?
Yeah.
Suman, just a quick question. So you said for the shorting, do you need to have a margin account enabled? Even though, let's say your account has cash, do you still need a margin account enabled? Okay,
you absolutely need a margin account anytime you short. I'll tell you why. Okay? The next slide is going to explain all the risks of, short selling. Let me quickly look at chats. Okay, cool. All right. Okay. So I'll explain why margin is required. Okay, remember, the broker never wants to lose money, right? They are like the house in a casino. The casino never wants to lose money. So they want to make sure that they can get their money back. And the way they can get their money back is by having the margin account. What they're basically saying is that I'm going to
Well, are you sharing
loan
anything?
you the money. You
Sorry.
can see?
Yeah, it's fine.
Okay. Okay. All right. Okay. So let's go through these bullets, and I think it will make sense to you. Okay. First thing is, like everything else in trading, short selling is also risky, and it's probably a little bit more risky than long. Okay. It can be very profitable, but the losses are infinite. Now you need to pay attention to this part of it. Okay. So remember, you bought Netflix, you sold Netflix, you shorted Netflix at 500, right? Expecting that it will go down. Okay. But Netflix can go to 600, 700, 900. It can go to $1 million. So guess what? Your account is actually going to go negative.
Suman, I can talk through my experience. I shorted RCL at 37. That was the time when I was panicking, guys. So this
Exactly.
So RCL was
Okay.
fluctuating, which is the cruise stock was fluctuating between 34 and 37. It went to 30. I sold it at 37 and then I shorted it at 37. It went to 40.
Mm-hmm.
I shorted some more. It went all the way up to 50, 49 and extended
Wow.
up to 52. So at one point of time, I was $17,000 or $18,000 negative just on one stock, and there were multiple.
Wow. See, that's scary, right?
It is scary.
So yeah. So that is the reason, the broker wants you to have a margin account so that they can offer you that loan, but then also liquidate you when they need to. Okay, it gives them that buffer when the stock goes up, when you're shorting. Okay, and then the other part of the risk is we live in a long biased world. Everybody wants the stocks to go up, right? The Federal Reserve, the politicians, they want the economy and the companies to succeed. They don't want them to fail, right? Which is why, the Fed is pumping trillions of dollars, they're talking about another 3 trillion next week, God knows when it will end. Okay? So remember that. So you are going to be a minority when you start shorting. I would say 95% of the market is long, maybe only 5% is short. Okay? So you have to remember that. And then short selling is also a target for regulators during bear markets. For example, right now, as we speak, you cannot short stocks in several European countries like Spain and Italy and France and so on, because they're suffering from COVID and they are afraid that short sellers are going to drive the prices down even more. So they simply ban short selling. So there's only, people who want to buy and it goes up. Again, it's artificially propping up the markets, right? Because in my mind, short sellers are important to create that market balance, because the market is not always efficient. We always see that. Stocks are overpriced, underpriced all the time. So if they're overpriced and you have a short seller who wants to sell it and put pressure on the stock, it'll probably come to a place where it makes more sense. The valuation is right. Okay. And
Hey,
then,
Suman, I have a question here. Can you relate this to, let's say, a market trend for a stock on FinViz?
Mm-hmm.
Or maybe Psychot, you can go through one of the stocks that you're talking about, just to see what the trends were and at what point did you decide to short sell?
I don't know. I mean,
if that's too hard, then that's fine. I just wanted to see. I just wanted to see what tools you use and how you mapped, your decision.
Yeah.
Hey,
So
Suman.
it is like,
Suman.
Yeah.
Okay, I'll give you some specific points that I captured from the chat the other day. On May 7th, you talked about at 12:11 a.m. You said, shop is finally weak, right?
Yeah.
And so on 5/7, you did some activity around shop, and you also said planning to hold it overnight and where do you see the support and so on. And you also talked about a reversal, seeing a reversal that day and such, right? So, I mean, in hindsight, it's always easy to spot these things. So I want to understand your thinking when you're in the moment. So that's why I try to capture some of these conversations so that in one of these calls, we can go back and
Sure.
what was going on.
So let me see if we can figure this out a little bit. Okay. I don't know how much time we have to do all this because we can talk about this stuff all day, literally. Okay.
So we have all day. Don't worry about
that. so this is the Shopify chart. Okay. Shopify, for those who are not familiar, this is an amazing company. The easiest way I'll explain this is for those of you who are active on Facebook, you see all these little product ads that you keep seeing. Buy these shoes, buy these clothes, whatever nonsense. Almost 100% of these small mom and pop companies are powered by Shopify. So Shopify has this very easy to use portal where you can create your catalogs and they will take care of the shopping cart, checkout process, payments, all that stuff. So, hey, somebody's got some music playing. Can you please go on mute?
Sorry, that's me. Sorry.
Okay, no problem. So, so it's a really cool company. It's a Canadian company and they're doing very well. And especially in times of COVID, where a lot of these mom and pops and retailers are closed down for business, they've been using Shopify to, basically e-commerce enable their products. And of course, we know that trend is not going to reverse, right? Even after things come back to normal, whenever that is, they are not going to shut down their e-commerce portal. So it's been an amazing trend. Okay. Let me do this first. Okay. All right. So May 7th. So this is when, I felt like, it was going to reverse a little bit. So it's all about price volume. Okay. If the trend looks like there are more sellers than buyers, then you know that the stock is a little bit overbought. Okay. So then I think I held it for a couple of days till it went down. And then once the trend reverses, you kind of sell it. So I probably traded from 730 to 700. And if I'm not wrong, that's about the same time, I think, when they did the equity offering. Okay. And this is something important to understand. Equity offering is basically a secondary offering of shares. So you guys probably kept hearing this in the news, why are public companies borrowing money from the Paycheck Protection Plan, from that whole SBA loan thing? Okay, it's been a big backlash. The reason is very simple. If you're a publicly traded company and if you want more money, you simply issue more shares, right? And that's what Shopify did, okay? Their stock price was like 730 or something. If they offer like 1 million shares, okay, and I think they offered it at like $700. Okay, they just raised a cool $70 million, just like that. Okay, now the stock obviously went down to 700. Okay, so that was one of the reasons I think I shorted it and I held it, and then I sold it. But then Shopify being Shopify, because it's such a hot stock, people didn't care. They looked at the money raise as a positive, not as a dilution of shares. They said, oh, that's great. Shopify has $70 million more, which means they can hire like another 30 salespeople, and they can hire another 30 people in the call center, and they can hire another 30 people in the tech team to develop new features for their e-commerce portal. All this means only good things for Shopify. Their sales are going to go up even higher. And sure enough, look at Shopify. It just stumbled for a couple of days and then it started going up again. Okay? Because some analysts did all this, analysis, and they said that Shopify at this prices is really good. We probably think the share will go to 800 or 900, whatever, right? And then stock keeps going up because Shopify has been one of the hottest COVID stocks because anybody who was not on an e-commerce platform before, Shopify has been like one of the top places they've been going. Another place that people have been going is Wix, W-I-X. They started out as a domain hosting company, web hosting company, but they've gotten into e-commerce as well. Again, right, their average customer is not tech savvy. They're like typical mom and pop people. They just want to sell their, shirts or vases or masks or whatever the hell they're selling, right? And these are great tools for it. So don't underestimate some of these stocks. You don't know how high is too high. And that's why we say don't short market leaders, right? We don't want to mess with them. Okay.
I just did it. Okay, so I'm shorted 764.5. It closed at 767. Their highest was 774 on Friday. 774.5 was 775. Can you take this as an example and kind of say, because it's like looking forward, what are your technicals saying? And it's probably a way for us to learn good, bad, good decision or a bad decision. You can never be sure one way or the other.
Exactly. You cannot be sure, right? So one way to do it is look at the technical analysis for Shopify, right? Look at this. Can you find a more bullish stock?
Yeah. And I've shorted.
Everything is buy. Everything is buy. So I wouldn't want
want
to short
has
this
Psycho
stock.
done the wrong thing? I mean, I'm going to ask a dumb question. I almost feel like Psycho, you've done the wrong thing.
Yeah.
Sorry.
It's a buy at 749, at 753, at 724, at 727. I've shorted at 767.
See, there you go. The last one is a sell. Maybe you will get lucky.
You might, yeah, you might.
So that's why I'm trying to understand, because this is an example. We never know what happens in the next week. But
nobody knows. Nobody knows. But if you look at the chart, if you look at the fundamentals, if you look at the technicals, the chance of it is going down is obviously very small.
Suman, can I join this discussion if you don't mind?
Yeah, please go ahead.
Psychot, I know what reason you bought, definitely. The other side, you have to think about any of the leaders. You need the confirmation. You need the confirmation before you step in the opposite side of the, either, short or long. If you want to buy any leader in a long side, means leaders, then you have to make sure it shows complete weakness. Right now, the shop is not going to show any weakness in any of the day. Even the day, Anant just mentioned about May 7th, someone posted is a reversal with whatever the secondary option they provided to, dilute more shares into the market. And a lot of people took advantage in stuff like, trying to understand, okay, this company is doing something which is not good, because the secondary means the diluting, right? Then the lot of retailers, they think, okay, the dilution is not good for company because the company is in trouble with revenues or whatever the money flow. But for Shopify is totally different. They are using for different purpose. And after the after the secondary, after the secondary announcement, if the price is above their secondary, that is a clear indication. Nobody wants to sell below the secondary price. The first indication for that's bull side. The second one is within 1 to 3 days, the price is not coming down and they start selling. Then definitely it's not coming down very soon. It should go upside. So that means whatever the recent entries like and the secondary dilution the stock, when it goes up only, if you see that trend, it is uptrend right now after the breakout before the earnings around like 650 range. It's showing uptrend, a 3 days run, and definitely a lot of profit taking, as well as it's a secondary announcement and it pulled back little 1 or 2 days. Then again it suddenly shows strength and it went up and it closed an all-time high. Then next day it gapped up and pulled back with whatever market start coming down, right? And it's around like 9:30 or something. So not 29:30. Then the next day it's a wild swing up and down, the all-time high versus the support level. The next day again, both days, market is selling heavily, and this stock didn't even buzz below the secondary price.
Yep.
So that is a clear indication. There is no confirmation yet. There is no way that you can short without confirmation in the market leader, and this is in a hot seat. After the the DXCM, the Shopify was the first one took off and took the leader seat. So since then it never showed back that it's giving up option for the shorts.
Govinda, what is the secondary price that you're talking about here?
That is a dilution, right? So someone mentioned about that.
Secondary offering around $700.
Oh, no. I followed that. No, I thought there is a certain thing. You are following a certain price on your technical sheet.
Yeah, I think that secondary offered at 700. If I'm right.
We're well past that. We are well past that. Yes.
Yeah, but see, after that, yeah, if that is the after, it was what, in March, the low side around like, 350, then it's 100% up. Since then, it's still showing strength, even though the secondary offer, then the market is right now shaking out around 29-30 range. It tried to shake out the market, but this didn't buzz. That is a clear indication that it has more room to run. Is the market is sidelines as well as market has shows any strength. And with the COVID situation, we are not done yet. It's a lot of catalyst. The catalyst is still strong for the stock move upside.
So
That
even
doesn't
at
mean
highest
that. Go
prices,
ahead, please.
it might go up. That is what you're suggesting.
Probabilities are high on the upside than coming down. If it comes down, you have to see that there is what is the next support. Is again, if you see the trend, if you just follow the trend, right, it's uptrend. So how many times it closed below 10-day moving average in last 1.5 months?
Got it. But I am, Govinda, not looking at a 10% return. I usually work with a 2 to 3%, anywhere between 1.5 to 3% on this, which is
so
yeah,
Psychot, if I
no,
were
I
you,
agree.
the next opportunity, you need to dump it.
No, what I am saying, if you want to look for this is what I want to tell. That definitely, I want to mention when Suman, finishes, question and answer time. I'm waiting for that to, step in. But just it comes to the, Anant discussion as well as you said you bought. I want to tell. Okay, if you see that the whole trend, right? After the 10-day and 20-day moving average crossover, took off, around April 2nd week. Since then, it didn't show the weakness except the one day. That is the day I posted, later showed some weakness. That was the only day it showed the below 10-day moving average close. And it opened below 10-day and closed below 10-day. It tried to break out the below this 10-day, but it failed and it closed below 10-day. That was the day I thought maybe shop is ready to come down. But the next day, what happened? It gapped up and it started running crazy. And that is the day it broke out. Basically, the complete the trend broke out and trying to break out the all-time highs, and then boom. Since then, it never showed back. If you see, there is no indication on the shop is coming down at this moment. Probably if the gap down tomorrow 500 points, 1,000 points, is there any bad news on shop or the COVID vaccine comes? Probably things are suddenly change to the shop, but right now the catalyst is not there for short side.
Makes sense. Okay, thank you.
Yeah.
And just I want to add to that too. You're looking for 1 to 2%, right? So if not only anyone who is looking for 1 to 2% on the short side, there are just find some weak stocks, then finding the hot stock on the upside. Okay. Go ahead.
If shop comes down, trust me, there are a lot of people waiting to buy it, including me. Okay, so when I shorted around 730 and I saw the offering price was around 700, the moment it came around 700, I think I didn't even wait for 700. I just dumped it because I know what shop can do. So I was more than happy to make that 25 bucks or whatever I made from it, and that's it. I'm not looking at it till it comes down. So shop to me is a long play, not a short play.
Okay.
So when you say, so when you dumped it, you did cover, you bought the stocks to return it back. That's what you mean,
yes.
right?
Yes, I covered it, yeah. I covered it around 7.
What is the definition of long when you and Govind say in the chat, Suman?
Long means you're buying low and selling high. Traditional.
So you're buying at this one, Kalyan.
Okay.
Yeah.
So basically, you're trying to sell now. So when you say long,
sell later when it goes up.
Okay.
In shop, I shorted.
Basically, for Scott, he has to hold it for longer now. No.
For Psychot?
No. I have to get rid of it as quickly as I can. I'm looking for a small dip, as I said. I'm looking for a one.
Exactly.
Oh, 764 was, because you shorted. Yes. Okay.
Yeah, because I'm not looking, I know stock is going to go up in the long run.
Yeah, there is a possibility, Sai. There is possibility. That's what I said, right? Any weakness in the market or the shop, that will come to the 10-day moving average. You have to see that the previous day low, because that is tomorrow. If you see in the Monday, you can see the Thursday low is going to be a 10-day moving average. If that comes, I think, it shows any weakness from there, you don't have to sell. That is the time you have to hold it, because, the Shopify is going to return, reversal the trend. So you have to identify that trend. That's it.
So, hey, so for the short side, there's no time bound, right? Like options, like if you do a put sell, it's a kind of short that you're trying to do, right? With a put sell.
No, the only time constraint is with options. If you're doing a regular equity short, there is no time frame. But of course,
they're called naked
but Suman,
shorts.
you can say that if it goes down to this, then sell it, right?
Yeah, it's just a limit order.
It's a limit short. Yeah, it's a limit order at that point. Yeah. Okay, got it. Yeah. Okay.
Question on that. I mean, if you are holding the short for a long period of time, right? That's in the sense, a week or so. Would there be any interest charged on that, or if
you're borrowing from margin, yes.
No, I mean you're not borrowing from margin. Cash. Okay.
Yeah.
Cool. Thanks.
Yeah.
What was the take? What was the take on Nvidia again, Suman?
Nvidia is just like shock. I mean, Nvidia is a super
it's going
strong
up, right?
stock, Yeah. I mean, Friday was like unbelievable. The whole semiconductor sector got hit because of the China news. But Nvidia was, I think, the only semiconductor that was going up.
Yeah, they're doing extremely well. I mean, they just bought Mellanox, so they're doing really well.
Yeah,
there is a catalyst
like
behind
AMD, Intel, Lam Research, everybody was down except for Nvidia.
There was a catalyst behind the Nvidia since the COVID starts. That is the reason Nvidia is acting, one of the strong semiconductor stock.
Yep.
Why do you? Oh, I see. Okay, yeah, maybe I understand.
It's also a hedge fund darling and all that too. So it gets pumped by Jim Cramer on Mad Money. There are a lot of Nvidia has a lot of fans. Again, same thing, right? Why bother shorting a market leader when there are so many losers? Go after those.
Yes, I agree.
Okay. So can you talk to more specifics on the right kind of stocks to short, and how do you usually go about finding them and
I think
structuring the buy? Yeah. Okay.
So let's just finish this top section first. So we talked about it, short selling is a target by regulators. Right now there's a short ban in many European countries, and then the short squeeze, that's another huge risk. Okay. Now what short squeeze is typically applies to companies which are heavily shorted. Okay. Now a company that is heavily shorted, which means everybody is bearish about it, everybody thinks the stock is going to go down, but there is a positive news or really good earnings which nobody was expecting. Okay, that can result in substantial losses for you as an investor. So some of the examples I put here: W, which is Wayfair, BBBY, Bed Bath & Beyond, Tesla. All these are heavily shorted stocks. So let's look at one of them just for the sake of example.
Can we look at Bed Bath & Beyond? Because according to me, they're not doing well.
Of course, no retailer is doing well right now. They might actually go out of business.
They're doing really bad.
Yeah. Okay, so let's look at Bed Bath & Beyond. So let's look at the short float. 61.7% of the people are short on this stock. Okay, basically they're expecting it to go bankrupt. Okay, now by some miracle, they get an investor or they, get acquired or their earnings are actually good. Guess what? This stock will bounce like crazy. Okay, you see, just because they're reopening, there was a little bit of good news. The stock went up 8% on Friday. Very volatile stock. Okay, so if I were looking to short, I would avoid it. Make sense?
Just to clarify, the metric that you're looking at this one is the short float.
Yes, short float. Okay. What percentage of the float of all the shares is short? So look at this shares float. So there are a total of 120 million shares, out of which 61.7% are short. So everybody is bearish about it. So guess what? The moment any good news comes up, you're going to start losing money, right? If you're on the short side, then what do? You have to buy to cover.
Right.
And what happens to a stock
Doesn't
when
it
you buy?
mean that
The
everybody
price
is
goes
trying to
up.
short it, so your short will go through?
What's that?
Doesn't it mean that everybody is trying to short it, trying to make money, expecting the price to go down further, so you can short it, right?
You can short it, but like I said, if there is any bit of good news, it will trigger a short squeeze.
Okay. But
Then
doesn't
you
it
will be
mean
stuck.
everybody is shorting right now? So it's like everybody's obvious that it's going to go down. That's what it's meaning, right?
What's that?
Like, does it mean like everybody is shorting around 61% are saying it's going to go down? So everybody is shorting right now.
Yeah.
So everybody is expecting the price to go even lower.
Yes, they're expecting this company to go bankrupt basically.
And that is not like happened like last 1 month, 2 months. It's been like for months and years. That short is not it's just for last 1 month. You have to identify different resources. You can see what is the recent short float on that particular stock. Is like accumulated like last 1 week or 1 month or 1 quarter. That is where you can identify from which for 1 quarter you can see what price it came down around like $14 to a $4 stock. So how much short percentage float accumulate on that particular period. That gives an indication either it goes further go down or is there any bounce is going to happen very soon. That is what you have to identify if you want to short this kind of thing, heavy short float stocks.
Yeah.
So what's a good range? So what's a good range for shorting? So
Well,
Suman, go ahead.
let's look at a market leader like say Microsoft. Okay, look at the short float, 0.64%. Nobody wants to short that because Microsoft is rock solid.
So Suman, in which chart can we see the trend for the short float for a given stock?
Yeah,
because I don't see it on Fin. Yeah, that would be interesting to see how the interest has changed over a period of time.
Yeah, I don't know of a good tool. Do you know where we can go in? Any idea?
To short?
Yeah,
short float.
Trend. What was the short float like a month ago, 2 months ago? And so
there is shortsqueeze.com.
Oh, okay. Yeah, that's right.
There we go. Yeah. All right.
Yep, there's always.
That's good to know. Thank you.
Yes.
Suman, do you have those key parameters that we should be looking at when doing short?
Well, like I said, I typically don't like to short a stock which has a very heavy short float because you could get stuck in a short squeeze.
Okay, I think I need to write that down.
So metaphorically speaking, if I may, as Suman, you can comment on this or Govind, how on the long side, everybody says, don't try to catch a falling knife because you just don't know how far it's going to fall down. And
that's a different thing. That is for a stock that is dropping like crazy.
No, I understand that. So what I'm saying is the short is exact opposite, i.e. that now you're trying to see how far is the top, right? It's going up, and then you're going to bet that it's going to come down.
Yes.
So it's the same challenge that on the reverse side, and all these different indicators, confirmation that you both have spoken about. I think it needs a little probably experienced eye to really find that out, but it's the same challenge.
Yeah, absolutely.
Suman,
and
Suman,
it's a price volume thing again.
Yeah, Suman, if you don't mind, if I really want to know some of the folks here to see what is the good way to identify the short. Shall we talk about just the Bed Bath and Beyond? I can put my inputs. You go ahead and start. Then I'll put my inputs if you don't mind.
So what was the tool that was mentioned? There was some crosstalk about something on shorting. You should go look at some.
Yeah, shortsqueeze.com.
Oh, shortsqueeze.com.
Okay. What I was asking, because all of this is like a state machine, So someone said don't short if the short flow is high. So I want that state machine. I want all these, like, I don't know if you and Govinda can come up with that sort of a matrix.
No, you don't have to, say that, you don't have to short, but you have to see the probabilities, like, when that thing happened, like, the recent times, or like, past quarter, or like, last year, you should know when that short float is like, increased. Yeah, definitely it is a high risk if it is like above 50% of the short float.
Right.
As one said, is a very high risk. Is there any small positive news? Forget about the big catalyst, like small positive news on that particular stock. You forced to cover it, whatever price you get it. That is how some of the short squeeze are like running crazy, like 30%, 50% in one day.
Okay, got it. Thank you.
Yeah.
And also. Yeah, if you see that, like, I'll just like, give the technical, overview about this Bed Bath Beyond. Look at that chart for last, like, since April, we can talk because there is a, move upside, right? See, every time it's trying to go the upside tick, it's coming down with very flash, like, flushing from tops. You can see the spikes. That means, like, that spikes, if you see the spikes, that is a clear indication, like, that right now it's trending is only short term. There is no long term trend is forming yet. If you want to think about the long term, in like investing on long term side, whatever reasons, there is a fundamental reason you can identify this stock as a long term. I know that, like, the bankruptcies are like, high probability, but in the fact that, like, the recent CEO change last year, he came from Target. The Target game changed because of his ideas. So everybody is expecting since then the Bed Bath Beyond is going to be the next big thing in retail sector. He's going to change the policies. He did already. He did a lot of things already in Bed Bath Beyond. So based on his past experience and results, long-term investors still hope on the Bed Bath Beyond going maybe 200%, 300%. Once this COVID is like fixed or COVID is going away. So you have to think what is the right time you want to put as a long-term investment. Is there any short is right now available? If you see the trend line, I don't see the confirmation. If the recent lows, whatever the last Thursday, if the trend is breaking, yes, you can take a short-term advantage to short the Bed Bath Beyond. But at this moment, I don't see that like you can short. Maybe you can predict that it's coming down, but the probabilities are like 50-50.
And Govin and Suman, I think you guys do the shorting. So is your tolerance different for shorting versus being long?
No, for me,
the stock should be the same. Risk is risk.
Yeah, you have a risk because I'll see. It doesn't matter whether it's short or long. I'll put my risk calculator right away. How much percentage I can lose. Either long or short, doesn't matter. Overnight, I cannot give any guarantee because it's all risk. But on the intraday perspective, I have my own stop limits. Okay, if I go beyond that, I don't mind whether it's a great stock like Microsoft. I don't even care. If it is, I'm going long. If it is coming down with my stop limit, I'll just sell and just stay away. It's same thing, Bed Bath Beyond. If I'm shorting and that's whatever the point, it's like going upside. I don't want to stay, even though there is a weak structure forming. Hope you got my explanation to your answer.
Yeah, thank you.
Cool.
Someone, sorry, go ahead, please.
Yeah, I think we should continue the discussion, but I would love to see the side by side of something like the Bed Bath and Beyond and Neiman Marcus.
Yeah, Neiman Marcus is bankrupt already. So
yeah, exactly.
So I don't think Neiman was ever public, right? They're a private company, so you can't really check.
Yeah, but it was very interesting of what they decided to file for.
No, the Bed Bath Beyond is way better than lot of stocks in the market right now. It's way better than that. Don't worry about. I'm not sure it's going to bankrupt, but I don't see any signal on the price action. It's going to bankrupt, but we never know since it's a retail stock, and the situation is right now the market is really weird. So I mean the technical side, I don't see that moment yet. Of course, the Sears, JCPenney, those things are right now happening, but Bed Bath & Beyond is totally different ballgame.
Yeah. So just to give you a sort of a comparison between Bed Bath & Beyond and JCPenney.
Oh, interesting. Yes.
Yesterday,
Yeah.
it's sort of like similar sector, right? So similar
Yeah.
market. Yeah. So the red line is JCPenney and the blue is BBY. So you can see, they were kind of correlated, and then the bankruptcy rumors go louder for JCPenney, and then it went much lower. But they both are suffering, BBY is just a taller, a midget. That's all. They're down 48% versus JCPenney down 65%, and now basically zero. All right. Okay, for the interest of time, let's keep moving. So we talked about short squeeze. That's a very important thing to worry about, to avoid big losses. Okay. And then the next thing is, short trades tie up capital, because brokerage firms require margin, but don't allow borrowing. So this is a very interesting thing. Remember how I told you, for every dollar, they'll let you borrow $3. But if you're shorting a stock, they won't let you borrow. In fact, they not only let you not borrow, but they reduce your buying power by 20% of that portion. So for example, let's say $1,000 stock or $100 stock, okay? Say Microsoft is $100, okay? And you shorted 100 shares, okay? So now you need to come up with $10,000, right? Now $10,000 is not only getting tied up, okay, but they will actually keep another $2,000, 20% of that $10,000 as a reserve, so that if Microsoft keeps going up and they need to liquidate you, they can still get their money back. Okay, so buying power is very important for day traders, as you know. So this is an important thing to remember when you're shorting. So make sure that you understand and you have enough capital in case you want to do other trades. Okay, all right. So that's all the bad news about short selling. Yeah, go ahead.
No, sorry, go ahead, Suman. Sorry.
So now let's talk about why or when should somebody short sell. Okay, one thing is in a bear market or a bearish sector. Okay, right now in the COVID environment, you got travel, hospitality, finance, restaurants, retail. You got a ton of sectors, right, which are doing really bad. All those stocks are primed for shorting. Okay, and that's what I've been doing. Those are my favorite sectors, and it's been fairly easy trades. The next thing is you would identify a frothy, overvalued stock. Okay. Now, obviously, Saikot probably thought Shop was one of these frothy, overvalued stocks, and that's why he wanted to short it. Right, Saikot?
Yeah,
So
I spotted Tesla too.
Yeah. So that is a dangerous thing, right? You don't know if they're really frothy and overvalued. Okay. Especially if they are market leaders, they are hedge fund darlings, why bother? Find something else. Find an easier trade. Okay. So there could also be sector laggards or a trend reversal. Okay. Those could also be the times that you would buy them. Another time you would short sell is if there are analyst downgrades or negative market commentary. Basically everybody starts hating the stock. Okay. For whatever reason. Like Wells Fargo became that stock recently, right? Nobody likes Wells Fargo. It's been going down faster than any other of the bank stocks. And the next one is the obvious, suspected fraud, accounting issues like Enron or leadership quitting. If some of the top leaders of the company are leaving, that's a sign that the company is in trouble, right? They don't want to be associated with their company, thinking shit. That's when I would short. And that is actually a very interesting scenario because Tesla is been one of those places where a lot of the leaders have been quitting over the last few years. And people keep shorting. It might work for the short term, but Tesla, for whatever reason, thanks to Elon Musk or whoever, they somehow turn things around, and they manage to beat expectations. I mean, their earnings positive for the last 2 quarters. Unbelievable. Nobody expected an electric vehicle company to start making money so quickly. And then the short squeeze news. Okay, when the short squeeze news turns out to be false. Okay, if you guys remember, we talked about AMC acquisition by Amazon. This was just last week or so, about a week ago. And as soon as I saw the news, I knew that was nonsense. Why the heck would Amazon buy AMC movie theaters? Absolutely no reason. Okay, so I started shorting that day. And sure enough, by end of the day, Amazon made a statement saying like, that's all BS. We are not in any talks with AMC. Boom. The stock fell like about 40%, I think. And I was able to make about 20% on the trade. So some of this is, kind of common sense, intuition, experience, whatever you want to call it. You have to see whether it makes sense or not. Okay. And then another thing that happens is IPO lockup expiration. So this is, something that you got to keep track on recent stocks. So one of them was Peloton, the bike company. Peloton has been a hot COVID stock, right? People stopped going to gyms. They started buying these bikes for $5,000 and, all that stuff, right? But the stock, even though it has run up, there is a specific date when the insiders who bought at the IPO price are allowed to sell the stock. It's usually 12 to 18 months, whatever. Okay. So that lockup expiration date is very important, because if I was one of the IPO, investors who bought the stock at $20 and now the stock is $60, guess what? I'm pretty happy that I tripled my money. I'm probably going to sell that stock. Okay. Even if 30% or 40% or even 10% of the people think like that, that will impact the stock price, because they will dump the stock and the stock will go down. So that's a good time to short it. So there's some timing involved there. You got to keep track of the IPO calendar. Edgar.com is a good place, to find that data. And then the last one is substantial insider selling by the company leaders or top holders. Now, this is very important to understand. It has to be substantial. Okay. Like few months ago, Jeff Bezos, he sold like $1 billion worth stock. And then everybody said, oh my God, he dumped $1 billion. So Amazon must be having problems, this and that. But that's nonsense. Because if you look at the actual percentage of his holdings, it was like less than 1% or maybe 1.5%. So that is not substantial. So there is nothing to panic about, and that is not a good reason to short Amazon. And there are people who did it and they got burned. Okay. So something to understand when to short. Any questions here?
So what would constitute as substantial in your mind? Just some ballpark.
I would say maybe 10%.
Okay.
Okay. For example, Warren Buffett, he sold, all the airlines, right? He had more than 10% shares. So that was substantial big news, especially for someone like Warren Buffett, who's a buy and hold guy, to dump. And yesterday the news came that he sold Goldman Sachs. And what is the other thing he sold? JP Morgan, yeah. So they both will be under pressure on Monday. So,
Do you think they are good candidates for shorting on Monday?
It all depends. Very difficult to say right now.
So on that difficulty part of it, Suman and Govind, I have a fairly general question, right? Yeah. Say if we were to throw in a rather very random Timbuktu company, XYZ, that you have never heard about.
Okay.
And, for you and, say for example, Govind or anyone else in the group, how long does it take for you? Because clearly there are a lot of different data points. One can look at it, almost analysis paralysis. Yeah. But how long typically does it take for you on that XYZ to decide, okay, today either I'm going to go long or short?
So good question. I mean, the basic thing is price and volume. Okay. They will tell you, they will give you the most information you need to understand. Okay. So look at the trend of the stock. Okay. Look at the news. make sure the earnings is not around the corner because that can burn you either up or down. So those are some of the basics. But most of us, we look for breakouts or breakdowns. Okay, that is where like the technical levels are. Again, dictated by price and volume, moving averages and things like that. And then some of them are, like I said, sector based. So you will have to do still a little bit of analysis, before you can pull the gun. It's not going to be just one or two criteria. You got to, stitch it all together to understand.
So Suman, I think what would also be helpful is, let's say, for next week, right, just as a sample, would you be able to walk us to, one or two stocks where that probably look like, good short setups for next week? Not that anybody will execute, just as, because
See, the biggest problem is with giving you names right now is you don't know if the market is going to gap up or gap down or be at the same level on Monday morning.
Okay, so then would a conversation like that be beneficial on a weekday evening? That way we know how that week is moving, and based on that we can figure out the right short setup.
A little bit easier, but again, right, there are so many factors, right? Typically, ahead of a long weekend with the slow news, stocks tend to go up.
Okay.
Okay, because they have this old saying, right? Sell in May and go away. That sort of attitude. Okay, so if there is nobody left to sell, stocks kind of drift above, especially in this environment where even bad news is being interpreted as good news in the market, right?
Yeah.
And then there are so many external factors. The Federal Reserve may come and announce some new program. Congress may pass like the next $3 trillion stimulus. There are so many unknowns. So the market is such a complicated animal. And then, there are always the big whales, like the hedge funds are someone who either pull out money or put in money. So it's very, very difficult to, make a blanket statement like that. And then what may happen to the overall market may not happen to the individual stocks. Because as we have seen, there are so many sectors, like the technology sector, for example. It's like trading like nobody's business, man. Doesn't matter how many people are dying, whether there's a vaccine or not, it doesn't care. It's just going up because no matter what, people know it's a secular trend. Because work from home is going to be a secular trend. So a lot of these, networking stocks, security stocks, all these things are going to be hot for a long time. That's a secular trend. Same thing with e-commerce,
Yeah, agreed. Exactly, for all these reasons, right? I think it's all the more essential to learn it to think in the moment, right? How do you analyze? So to pick one or two candidate as samples and walk through would be helpful. It doesn't have to be next week, but whenever in the one of these upcoming days, whenever you think would be a good day, it'll be helpful to walk through one or two companies as sample to help us understand how to analyze, how to think, and so on. Yeah, we may be right, we may be wrong. That's part of the learning curve as well, right?
So like I said, for example, the trading view, that shows the different levels for buying and selling, right? So that's something to watch. If you're looking for short term, look for 20-day or 30-day moving average and see, if the trend is breaking or supporting. You see if the stock is going above or below. And then when you have a tool like, when you have a tool like Sink or Swim, you can see the bars, right? You can see, minute by minute or 5-minute chart or whatever it is. You'll know exactly, you can change it. You can do 1-minute charts.
Suman, when you short, do you keep it for multi-days or just keep it for a day, intraday?
It depends. If it's a stock I'm not very familiar with, for example, on Friday, APT, I did not trade APT before. So I'm not really understanding that stock, I know it's a very volatile stock. APT is, making all this PPP equipment, masks and glasses and whatever else for first responders. So it's a hot stock, but you don't know how it's going to do. I mean, APT has been like very volatile, right? So I just got out, I made like 30 cents, I think I bought like 2,000 shares or something. So I was fine. I didn't care. But then it popped up, right? So look at APT here. See, I got it over here when the breakout was happening. See, so you see the volume picking up. This is a big thing. This is how you identify a breakout. You see these blue bars? Those are volume. Okay? Volume has been low. And suddenly, volume went up and it's a green candle. So that means a lot of people are coming in to buy this stock and pushing this price up. And that is when Govind alerted saying that, hey, APT is about to break out. Okay? Then I jumped in. I think at like 15 or something I jumped in. Okay? And then, boom, it took off. Look at this volume chart. This volume is like, what? Double of the previous volume, last 5 minutes. Okay? That is substantial. And that is why it spiked up. See, it went up all the way till 16. And I remember Saikot top dictated. He sold it at 16.15. Perfect timing. And then after that, it kind of came down and boom. It went down.
So
whoever bought from Saikot at 16.15 is kicking himself, right?
Suman, I don't know. Do you have any time frame to continue this Zoom session? I know because as Anant and Sai mentioned about how we can pick some of the charts and is the probabilities. I have a few examples to explain. I'm not sure. It all depends on your time frame.
No, I'm free as well. Can't go anywhere these days, right? Do you want to take the screen?
No, actually, you can open the. I can just because I know I can't connect, but you just open the chart because since you're in the matrix already, you can open some of the charts.
Yes, Suman, one quick question before you move. I mean, when you mentioned, obviously about this talk just now, the kind of the volume went up. How do we know? So obviously, some big player came in to have that kind of substantial volume. So how do we know? Whether it's a big player coming in or what percentage of volume is attributed to a retail investor and what percentage of volume is a. You will ever know that? Okay.
No. The
Suman,
only thing you care about is price and volume. Who cares who is buying?
I understand, but how do you kind of make a conclusive or a conclusive decision on what kind of volume is it? What are the different kind of players involved here within that volume?
Kiran, this is Govinda. I want to give that answer. I'm not sure. Suman is mentioned about volume, right? So if you see that volume and, as you said, who cares who bought that many shares? We don't have to know, right? But one thing, if you want to know that, substantial, the potential buyer on that particular day, they don't want to buy at one particular point. They want to slowly accumulate the position. So they want to spread the whole day or they want to spread the whole week based on that, the type of stock. The type of
that's why we want to understand, isn't it? Because the way the graph will move, if it's like some hedge fund coming in, we know the graph moves differently versus an insider sale. Insider buying, the graph moves differently. Versus some news kind of moving moving the volume, it works differently.
Exactly.
So we know how the moves happen, but we for that to analyze, if we can kind of catch up front, like whether it's a hedge fund, whether it's a news moving it up, how do we kind of attribute that volume to?
That is, the price action is the commander picture. Okay, if you know how to read the price action, then you can understand what is happening in the stock move. Okay, for example, let's go to the BBBY. That's Bed Bath Beyond.
One second, I want to show him about the ownership. So if you go to Finviz, Kiran, look at this. It shows institutional ownership. 24.4% are institutions.
But it is all after fact, Suman. It's not like the particular day. It is almost like
No, I know. I'm saying in general. It kind of tells you, okay, only a quarter of the shares are owned by institutions. Okay, so most of the shares are retail. And also look at the short float, 33.25%, very high. Okay, compare this with someone like Microsoft. Look at the institutions, 74% institution buyers, all owned by pension funds, big hedge funds, big mutual funds. Big difference, right?
Kiran, if you want to know what funds in that particular what do you call the stock is owns like in institutions, especially not the mutual funds, because they own the big chunk compared with mutual funds. Because mutual funds pretty much like in hedge funds and mutual funds, they don't want to stay long period, especially the trend is gone. Like in the old days, yeah, once they buy, they hold it for years, but not anymore. The based on current scenario for last decade, the hedge fund process is completely different. At the same time, what do you call the how many shares on percentage wise I can talk, how much percentage they're holding on the particular position since how long. There is like a different not the brokers, or I think if you go, I think maybe in a TD Ameritrade or E-Trade they'll show you something, but if you go to the Fidelity, yeah, they have very good fundamental and all this information. You can find all those details.
Yeah.
I believe even E-Trade has that one too, if I'm right.
Yeah. You can find a lot of information. Like I was mentioning in the beginning, that is the beauty of today versus, maybe 10, 20 years ago. The amount of information access that we as retail traders have is immense. The gap between us and the professionals is very less. And whatever information we have, I think it's plenty to make a decision and trade.
And if you want to know, Kiran, if you want to know exactly on somebody is not, can you please mute if you don't mind? Yeah, if you want to know exactly like on the particular day, if something is happening in the stock, there are like different ways you can identify. If it is like for example, if you just go and see the bed bought beyond. So what happened, if you see I think it's April 23rd or 24th. If you see what happened on those 3 days, it is not trying to struggle, but it is a heavy volume on the buy side, on the BBBY, but it's trying to struggle to go upside or downside. That is where you have to identify like how the buy volume is coming. If you see the price action on the intraday, it will give you an indication it may go upside in short term. There is no guarantee that it is going all the way shoot, but there is a high probability it may go upside based on the 3 days of action. It's like the both buyers and sellers, they fought like really crazy, not moving upside or downside. It held up really good between 28th, 21st, 22nd. Then boom, the next day the volume comes into the picture and it start moving upside, and it continuously moved from 472 all the way to 730 or 740. It's close to 45%. It moved 45% in just 3 days because some hedge fund, they loaded up on that particular day. They don't want to move fast. They want to just load up on that particular thing. Maybe, after 3 days or 4th day, that is, they decide, okay, they got their thing. The 40% is very high probability in this market to got it. And they just, maybe they dumped it back.
Yep. So you see here on the chart, it's right where he was saying around 420, and it went up all the way to 688.
No, even the next day it gapped up and it start running. That is where they start fading. Okay, so that is a short term. It is similar. If you want to look into the the weekly chart, it will give you an indication for long term investment. If you're looking for long term, it's pretty much similar fashion. You can identify in the weekly charts. If you want to really know, okay, so what's happening on the particular stock, is there any hype hedge fund is buying, then you have to see how the price action in intraday is moving, like an hourly chart. If you go hourly chart, they're trying to keep very narrow. They don't want to move even not even 2 to 3%, even though the heavy volume is coming into the stock, but they don't want to move. They want to keep it very narrow range for maybe a couple of days or maybe in a week or 2 weeks before it takes up or downside. So you have to identify that way. That is hourly chart price action.
Okay.
I hope you got some information. I'm not sure, but I try to explain what is
No,
your question
I got
is
it.
like.
So, yeah. So, I don't say you can generalize this, but can you probably, to some extent, with a high probability, say that wherever a stock is struggling, with price action between the sellers and buyers with a high volume, is that a good entry point? I mean, typically, and then I mean, you need to look at the shorts too. So based on these three criteria, typically when it starts moving up in that hourly price, in that hourly price range, is that a good indication to say that, okay, now given this, the three criteria that it met, now it's some hedge fund kind of trying to get in? Because I mean, for hedge funds, I mean, that's an ideal bet, isn't it? I mean, they have a large volume going on. The buyers and sellers are struggling. It's a great bet for a hedge fund, in my opinion. Kind of step in there and kind of take it forward.
Yeah, the hedge funds, they don't want to buy when the stock is going up. They don't want to buy. They want to enter all things that whatever the move is, before that, not the on the move. Usually they don't buy.
Exactly.
Hedge funds,
hedge funds are so big that they can make the move happen.
Yeah, because of the first 3 days before that heavy volume, see the spikes like kind of 30 million one day, the other day is like almost like 40 million. Before those 2 days, if you see that it's narrow range short stock move, but the buy volume is very high. So that gives indication that the very high probability the next 2 to 3 days you can see some spike on that particular stock. Suman, I think you go ahead and check the daily chart, Suman, if you don't mind. That is where I'm talking about. Yeah, the 2 days is very narrow range. If you see, the open and close is not even like 2% move, or 3% move. It's very narrow range move with a high volume onto the buy side.
Okay, got it.
Yeah. Suman, thank you, Suman.
Sure.
And also not talking about the short side, right? Now, I took one or two examples. I can explain if we have time.
Yeah, go ahead.
Yeah, can you open the TER, Tom, Elephant, Roberts?
Okay. Okay, this is very important for me. Please, sorry about it. I will do.
Okay.
We can talk later. I'm sorry, someone is like not in mute, but
Yeah, please go on mute if you're not.
లోపల రా చెప్తాను నీకు గుర్తుండేలా చెప్తాదా రా చెప్తాను రా.
Can you please mute if you don't mind?
Hey, Suman, you can mute everybody.
Yeah, I can do that. Then I can open. I can just mute it.
Govind, can you speak?
Yeah, I can. Can you hear?
Go ahead. Yes, go ahead.
Okay. Yeah, can you open that TER? Yeah, you're in there. Okay.
Yes.
Just go into dialing.
Daily? Yeah, this is a daily. Yeah.
Okay, I just yeah, cool. Go all the way to the end. I think you can see that.
Okay, it's already ended.
It's a TR, right? No, I think it's
Teradine, right?
Yeah. What happened? I think no, it looks different for me than your chart. I think its end is not same. I think you can just go all the way end.
Yeah, it's till the end. You're not able to see. It's going all the way till 5:15.
The end close was different chart. I see, Suman.
Are you seeing Thinkorswim?
Yeah. Okay, now I can see. Okay. I'm sorry. Actually, no, that the screen was released. Okay, I think Anand and Sai, I think they're asking about this short thing, how I can identify, right? So yeah, for the whatever scans I'm running, I found this one. Okay, so look at that chart. Like, you know, the market was so, I mean, I can't say bullish, but it's trying to recover from the lows on Friday. And, you know, as Suman mentioned a few times about the semiconductor was so weak, except NVIDIA. If you see that, you know, the Thursday, it's trying to, you know, move upside with the semiconductor move. It's like, you know, with whatever the Taiwan semiconductor plant is opening in Arizona, then all of a sudden the semiconductor sector was just like, you know, took off like last 1 or 2 hours. Then with China trade news, and suddenly, you know, the entire semiconductor was, you know, showing weakness. And the way you know, it's acting from last 1 week, if you notice that from Monday to like Friday, you know, nobody wants to take this upside. You know, in opportunity comes, they want to like, you know, bring it downside. So the trend is slowly forming downside, and it got hit the supports on Friday, and it trying to held up, you know, pretty much lows of the day, you know, if you consider that. And that kind of, you know, the formation, if there's any weakness, you know, sector wise as well as market on Monday or Tuesday, the probabilities are very high. These stocks are like, you know, breaking down the recent supports around like, you know, May, what is that, May 1st. Yeah, if that breaks down, I think you have a potential run around like, you know, 10% downside.
Yep, you see this May 1st? So May 1st bottom was 56.6 and we are at 56.89. So if we go below that, yeah, then there is no support all the way till about 51 or so.
So why I picked the particular, because there are so many things in that, and why I picked the particular thing. So you have to see the probabilities, right? I was talking about the probability. See, the sector is on like no downturn with, you know, the negative news from China trade news on the, you know, definitely semiconductor is the one thing, the big impact to that. The second one, this trend is already, you know, formed before that news, you know, is established on Friday. It is like right now. And the third one, if you see the volume on the Friday, it is above average, daily average above volume on that, you know, sell side. So that like, you know, more sellers are in this stock and particular, you know, short-term time frame than buyers. If you see on that, you know, Thursday on upside semiconductor, the buyers, yeah, they stepped in. Probably some of the shorts they covered, or some of the new buyers, you know, stepped in, but they didn't take, you know, high range. They closed it really high. You know, that is a one indicator. You have to identify, you know, if it is reversal, is it closed at high, but the next day it's a gap down and it is, you know, trying to close at lows, pretty much lows at support. That is like, you know, if something, you know, it's showing the weakness in the semiconductor, that whatever the China news, you know, giving more concrete in the weekend, then this will maybe gap down before that support levels, and it
What
start
is
coming.
gap down?
Means like, you know, it's gap down means like, you know, negative open.
See, you see this, right? This is called a gap down. You see,
No.
April
That is
30th, I'm just giving you an example. April 30th, it closed at 645, right? It gapped down. Next day, it opened at only 693.
Yeah,
So
that is true.
basically, those $2 gap, right? There was never a continuous down. It gapped down. Next day, it just went down $2. There was no trades in between. That is called gap down. Make sense?
Yeah, even this stock, you know, it was gap down on Friday. You know, if you see open and close, it was like it's trying to recover in the like, you know, probably midday, because of the, you know, heavy strength on Nvidia and like, you know, other things they're trying to show. It's trying to recover, but there is no strength for upside, and it gave back. That is giving the, you know, probability side. It's a very high probability if you want to short. And on Monday, if any news, I mean, like market is sidelines or market showing any weakness, that is definitely, it is high probability right away. And if any news from the semiconductor side, it shows, okay, that China is like, you know, the negotiations probably is going to break very soon, then this will come down and give you a 10% probability. Then the upside, you have only like, you know, probability. I mean, if you want to take a risk, you know, you have to take a risk with I can say, days high on Friday, days high is your, stop limit. That is pretty much like $3, not even $3, $2.50 upside risk versus, $5, downside probabilities, This is like 1:2. You can identify that. If you want really tight stop, it's one like now, you don't want to take a big risk. You can see, at 50-day moving average, that is one you can put it very tight if you have a size. Yeah, you want to load up 30% or 40% of your portfolio. Then you want to put a very tight stop. Then you can take that as 50-day moving average 57.81. That is one thing. Then you want to take another step. Okay, I can take another little extra risk. You can go up to the what is the open on Thursday, the previous day open is almost $59. That is where you cannot stay. If the strength comes at that time, you don't have to stay in that stock. It doesn't matter whether it's a downtrend or not, because if the buyer is stepping in and the shorts are trying to cover, it moves so fast to the upside up to the the Thursday highs. That means you're losing another 3 to 5% very fast.
Okay, one thing I wanted to ask you guys: are you guys familiar with the doji candles? Do you know how to read these candles? I can quickly explain if anybody wants.
Yeah, please, Suman. I think that helps for them too.
Sure,
Okay,
go ahead,
yeah.
Suman.
Okay, so the candle is very simple. Okay, so this is an old Japanese, charting system that the stock market loves using. So let's look at this candle, for example, March 24th. Okay, so you see a rectangle, right? So the bottom of the rectangle is where it opened, and the top of the rectangle is when it closed. Okay, and then you see the lines. That is the maximum intraday move. Okay, so basically on March 24th, you see the number on the right side, 48.18 is where Teradyne opened. 52.89 is where it closed. And the small line, 47.8 is the low of the day. And you see there's a tiny top line. 52.96 is the top of the day. And this was the bottom of the day, 47.88. Okay, very simple. So if it is green, it means that day the stock went up. Okay, and the bottom of the rectangle is open, top of the rectangle is closed. Now let's look at the opposite, a red candle. Red candle means it opened at 48.49 here on March 20th, and it closed at 44.31 at the bottom of the day, at the end of the day. That's why it's a rectangle, a red candle, because it closed lower than the open. And again, the lines, the high of the day was 49.93, low of the day was a little bit lower than the low closing, 43.93. Now, the doji charts are very important to understand because it really tells you the sentiment. Okay, and look at this one. It's such a beautiful example. Jan 23rd. Look at the volume, 16.2 million. Okay, that's like 3 or 4 times the normal volume. Okay, and look at what happened. It's a red day, which means the stock opened higher at 79.14. It peaked at 81.57, and it went down all the way till 74.97 to close at 76.11. Okay, so this is a beautiful reversal day with high volume. It opened high, closed low, and guess what? The stock kept going down, kept going down. It bounced a little bit, again kept going down, kept going down, kept going down. So if you bought like say somewhere here around 80, you could have sold it around 65. What a trade that would have been. $15 trade. That's like about more than 20% gain in just less than a week. Does that make sense, guys?
Mm-hmm. I want to give you another example.
Sure.
So can you open the altar, Suman? Look at that altar chart. It's definitely, we know that the second wave is coming, and there is a high probability that right now the Alta is one of the
yeah. By the way, you guys know what Alta does, right? The beauty products. Yeah. So Alta will not do well if everybody is working from home, right?
there is so many reasons. I picked that one as my short candidate on Friday.
Yeah.
If you look at that chart, how that's showing, and it went up. It went up when almost like what I can tell you exactly the percentage wise. 82% from March loss.
Wow! Look at this.
It is
from the time the shutdown started. Boom, 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 boom. Wow.
Yeah, it's coming down, but
So
now in
like
March
a $260 stock went down to 124 in just 1 week.
And it recovered because of the long-term investors or whatever. Like it recovered so fast, and it's going up. Like every uptick, if you see the daily.
Yeah, it's probably some short squeeze happening too.
Yeah, the short squeeze, and especially now if you see the daily, above, the 50-day moving average, whenever it goes up, it's coming down fast. That's how it happened, and the downtrend started because second wave or the open whatever the recent open was not really catchy for the these kind of retail stocks, because there is no business for them even though they open, because who is going to take the risk to go, especially the Alta is a high-end beauty side. So probabilities are so high and fundamental. I'm looking for the technical perspective. Okay, let's see what is happening. 2 days heavy volume sell off, and the bounce based on the market on Thursday. With it's a good volume. I can't say it's low, but it stayed above 50-day moving average. And again, on Friday, it's it's gap down, and it's trying to recover, and it's trying to close just above 50-day moving average. If you see all the moving average, it just stopped at 5-day moving average. Whatever reasons, if that support, the close, not close, the open on Thursday, if it breaks down, that is a support basically. If that support gives up around 194, then there is a high probability this stock will come down all the way, all the way to 150, 160 range.
I'm trying to remember where I can draw the 50-day moving average.
So one question on that downward trend that you guys, right? By
I think I think you can unmute to everyone. Suman, it's like Sai is talking, right?
Yeah, go ahead. Go ahead.
Right. Can you hear me? Yeah. Yes. So on those candles, which are a bunch of red, the trend on to the downward with a high volume.
Yeah.
When that starts happening, and if I were to be the broker, even I am aware of that risk, right? That, oh, my stock, whatever I'm holding on to, is going down. Yep. So when you want to short it, isn't the premium also going higher when that happens?
Premium in the sense?
Don't you have to pay? Like if you buy the puts, like you have to pay, right?
No, that is for options. We're not even talking options here, right? We're just talking regular equity short. There is no fees involved.
Need to see as to where you get it, I guess. The only thing that I see on the short side is options.
No. Basically, yeah. You can just type here.
So when you try to put
and then you basically do sell. Then you basically sell, say 10,000 stocks, what price you want, that's it, you're done. Limit order.
So you put your buy order, like it's a short sell, right? That's the option you pick.
Yeah. Well, if you don't have any shares and you're selling, it's automatically a short sell.
And you put it as minus whatever you're putting as that, right, Suman?
Yeah, it's automatic, right? It shows as minus when you're selling.
So, but the question is that how do you do the cover thing? If I want to put in, like in options, you can do legs, right? You can't do this.
Then you basically buy. What you do is, whatever position you have, you right click on it and you say close position. And if it's a short position, then it goes to buy like this.
Fidelity has the explicit option to say short sell or buy to cover.
Yeah.
I think even TD Ameritrade has got, but I think it is on the website, if I'm not right, on the web.
Yeah. On the web portal, it says buy to cover, sell short. On the Think or Swim platform, it just buy and sell. That's it.
Yeah. Okay.
It assumes that, you're shorting. If you don't have anything and you're trying to sell, you're shorting.
Okay, Suman, I have a question on this, and it could be, I've never done short selling, but still. Okay, what happens if just like you have market, right? Like if you buy market, you should never buy stocks in market. You should always give it a limit, right?
Always use limit orders, yes.
Yeah, so what happens if I do a short sell? Say, for example, right now the price is 199. I do it at, say, 210. And I also buy at 199. So I'll always be getting that $10, right? Because I'm borrowing the stocks to sell at 200.
Mm-hmm.
Short sell. Am I doing it correctly, or am I getting confused?
You want to sell at
a higher price than the market price, right? No, the current.
You want to sell at a higher price always.
Oh, you want to sell at a higher price always. Okay.
Yeah.
Okay.
And then you want to buy it down at a lower price.
So why does anybody ever want to do the regular options then with all the time risk and everything? Is only because they just don't have the capital?
That is one thing. And options are, typically it's more like an insurance, right? You have a certain amount of time and, you either completely lose your money or you make some money. And you use far lesser capital.
Yeah, percentage wise, you'll see bigger side on the option if you're in the right direction.
Yes.
Okay.
The one thing is, in terms of liquidity, options will not have the same liquidity as shares. Shares will have far more volume.
Yeah. And I think the funds logged in are also different, right?
Mm-hmm.
When you short sell, you might have the entire amount of the shorted amount logged in, whereas with options, it might be just the options amount.
Yeah, that's what I was saying. So the capital requirement is far lesser for options.
Okay, yeah.
Okay.
Yeah, there are a bunch of semiconductor stocks on the short, probabilities. If anybody wants to look, go ahead and see that. Yeah, if possible, I'll send the list of the shorts because everybody's looking the short side. Yeah, the probabilities are high on the semiconductor, except the Nvidia. You don't touch Nvidia even it's up too much. You won't get even very very tough. I tried on Friday at 329. I gave it $2 risk and see whether my because it tried it. I think twice it went up and pulled back, and I think the third time I said okay, maybe this is time it's reversal. It didn't give me a chance. My $2 gone in just probably in 3 minutes.
Wow.
So yeah, don't try to short that kind of stock if it's really going high side. Yeah, I thought initially because of the option pinning that 330 is probably it's very high probability to come back, and third time I think it's most likely it will give up, but they didn't give up and it closed very high, all-time high. That stock is shoot up like crazy. If any good news on semiconductors, I won't even see. I don't know. Maybe 400 is just like in probably in 2 to 3 weeks.
Yeah. Exactly.
So
cool.
God,
I know we've already spent like 2.5 hours, so I just want to spend a few more minutes on this slide so that we're not killing the whole Saturday for everybody. Okay. So these are some of my favorite trading principles I wanted to share. Over the years, I kind of made a list. Okay. The first thing is, are you guys familiar with John Maynard Keynes? He's like a British economist, passed away like 70 years ago, but things he has said and his research is like golden, it's forever. So some of his favorite sayings, I listed here, a couple of my favorites. Okay, the first one is very, very important for the last few weeks. A lot of us were scratching our heads, right? First thing is the market can stay irrationally longer than you can stay solvent. Okay. So this is basically, why is the market going up? Things are like so bad outside, Why is the market going up? Okay, that's basically what it is, because markets can be irrational. That's it. The simple thing, it's like boils down to supply and demand for any stock market, any stock, any commodity. If there are more buyers than sellers, price will go up. Simple. That's it. Why are there more buyers? Who knows? Okay. Now that brings me to the second point, which we, I think, learned also the hard way. Don't fight the Fed. Okay. If the Federal Reserve, okay, which can print unlimited amount of money, which is the only institution in the world that can do that, if they are trying to backstop the losses, they are trying to buy corporate bonds, don't fight the Fed. Okay. This is again for the long term, duration of the market. Short term, yes, you will have ups and downs, and that's how, we traders try to identify individual stocks and make money. Okay. So don't forget that. Third one is trade stocks that have liquidity. Okay. Liquidity means basically volume. Okay. Because that will allow you to enter and exit stocks at prices you want. And also trade stocks that have volatility, because that will give you the range. Okay. If you're trying to trade like Microsoft, which moves like 1 or 2% every day, you're not going to make any money. If you're going to trade something like Nvidia, which moves, 15, 20 bucks a day, you're going to make money there. Okay. So that's something to remember if you're trading. And then I think we have talked about this all throughout today's presentation. Don't short market leaders, whether it is Sharp or Nvidia or any of these hot, stocks. Don't bother shorting them. Okay, it might work for you short term. You might get lucky for a day or two. Like when I shorted Sharp for the secondary offering, I was sort of lucky. I basically, traded down that 25 bucks and got out of it. But if I didn't get out of it and I was sticking to my gun saying that, well, they did a secondary offering for $70 million, they have to go down. But guess what? They did not, because the market looked at it as a positive thing, because that's going to fuel more growth. Okay. So the risk reward is not proportional. So don't short market leaders. And then another favorite of mine from Keynes, when facts change, I change my mind. So always be with an open mind. Don't stick to your gun saying that, no, whatever decision I made, it has to be the right way. There are so many people who got burnt in stocks like Boeing. I don't know if you guys know this guy called Portnoy. He's the CEO of Barstools. He's a funny guy. He trades all these crazy stocks, travel and airlines and all, and he's losing millions of dollars. And he's like adamant. He's like, no, things have to get better. Boeing has to start making planes. They will start flying again. Nobody's saying no. But guess what? In the short term, it's not happening. So you got to change your mind. Okay? If there is no vaccine, if people are not going back to normal, next Monday, don't bother. If you're a trader, use your capital wisely. Why do you want to tie up your capital in something that will take 5 years to go up? Doesn't make sense. Okay? Don't let price trick you. Okay? Volume speaks the truth. So this is very important for certain thinly traded stocks, because if the volume is low and the price is going up or down heavily, that means the price is being manipulated. Okay, so remember that. So for example, and an extension of that is stay away from low dollar stocks and pump and dump stocks. For example, CYDY. This has been touted as a coronavirus stock. It's a crappy pharmaceutical company, basically a shell company. They use newsletters and all that to pump and dump stocks. So just stay away from them. They're like extremely manipulated. Why would you want to be in that? Okay, it's just a headache. And the next one is locking profits. I think we repeat that every day. It's better to make a buck than losing a buck, right? Fine, you didn't make $3, but at least you made a buck. So, whenever you can, lock your profits. If not the whole amount, at least 50%, 25%, whatever. Take it in chunks. That's what I did with TZA the other day. I had a big position and I kept locking profits as the stock kept going up. When it hit 42, I sold some. When it hit 43, I sold some. 44, I sold some. That way, you're not stuck with everything. You want to be liquid. And then we again talked about this. Trend is your friend. Okay. always trade with momentum. Wherever the price and volume is trending, go ahead and do that, because the moment it does not, then dump it or even go short. But there's no point trying to go against the trend. Doesn't make any sense. Okay, it's like buying financials when financials have been continuously going down for the last 6 weeks. Why buy them? Why? There's no hurry, right? Wait for the trend to reverse and then buy them. Okay, insider buying. Okay, we talked about that earlier. Whenever there's significant insider buying, it's always positive for a stock. Penn was that example that we looked at in Finviz. Both the CEO and the director, they both bought, and boom, the stock went up. Okay. Next thing is fear and greed. I think we've heard that. Those are the two emotions that dictate all trading, right? And the only way you can get around that is by putting stop loss limits. Okay, whether it's a percentage or a dollar amount, for every position, as soon as you buy, put it and forget it. That will help you remove the emotion and help you manage the risk better, and definitely will help you sleep better. And this is something I'm guilty of. I have made mistakes there, so I have to get better myself, but it's a habit. You just got to keep doing it. Otherwise, you're going to be losing large amounts of money and you're going to be kicking yourself. Okay. And then remember, you need to be profitable only 70% of your trades to be successful. Fairly successful, in fact, not just successful. Because even if you lose money 30% of the time because of stop losses, guess what? You're capping your losses. So overall, you'll be very profitable. You'll make enough money. Most of us can easily make more money than our salaries in the current market. It's just, it's been amazing. The next thing I would say is paper trading. Okay, if you are not familiar with a particular idea or a new feature, don't trade with real money. Use the paper trading. Every broker has a paper trading option. So you basically simulate your trades and learn from your mistakes. And once you're ready to play with real money, then go ahead and do it. And then the last thing I would say is patience. Okay, it's really a virtue, and I'm guilty of this. I trade sometimes just because I'm bored, because nothing is going on. But whenever you trade when you're bored, trust me, you're very, very likely to lose money. So trade only when there's a setup. I think we've talked a lot about setups, breakouts and moving averages and price volume action and all that stuff. So be patient. Do these principles make sense, guys?
Yep.
Yep. Any of you guys want to add anything to this list that you think will be useful for all of us? Okay, cool. Govind, anything from your side?
Yeah, I think this is a very good information, Suman. I think pretty much you covered about this trading principles. Yeah, stick with this one is good enough for as Suman mentioned, whatever we make, and not for entrepreneurs. I'm talking about the regular employee salaries is nothing compared to what you can gain in this. But the only thing I can say, the profit only 70%. That is really high, and if you make 70% of your trades are successful, I mean, with you have to follow the basic fundamentals about the upside move. Then amazing, your profits are at least like I can say 50 to 75% of every year returns.
Yep.
That means you beat all the top level hedge funds.
Yep.
So one last area, Suman or Govind, you guys can probably talk about from your experience. The morning couple of hours versus the evening couple of hours. There is always a trend, right? It's morning is when. So can you briefly talk about the time of the day and what impact or general influence it has on your trading?
Yeah, basically,
Suman, you go ahead.
The first 1 hour and the last 1 hour of the day are the most active. I mean, the trends are very difficult to really see, right? I mean, some of them can be news and economic news or whatever based, and some of them are head fakes. We see that, market goes up the first half an hour, 45 minutes, 1 hour, and then it starts reversing and goes down. And then the last 1 hour, it feels like, artificially somebody is buying the market up, like the Fed or somebody, So it is very hard to obviously, determine what exactly is going to happen, but that's definitely where the volatility is the highest. So the morning 1 hour and the closing 1 hour, those are when you want to be very alert and look for opportunities. That's when you're going to find your trades.
Hey, Suman and Govind, I have a question. You guys keep talking about momentum stock, right? The momentum, you want to do the intraday on the momentum side. So for the pre-market, just like you have after hours, right? In the evening earnings and all, you see the stock price change after the close of market. So what happens on the pre-market side? Doesn't that give you a momentum? It opens 1 hour earlier, right? Or half an hour, 45 minutes, something like that.
No, it opens at 4 a.m. Eastern.
Okay.
So 4.5 hours ahead. Actually, about 5.5 hours.
No, actually 4 a.m. You cannot trade. Only institutions can do that. As a retailer, you can trade.
No,
I think
it does. I have traded on Ameritrade.
4 a.m.
4 a.m. it opens. Yeah.
Okay,
4
I think
Eastern to 8 p.m. Eastern. There are
8 p.m. Yeah, 8 p.m. But
Oh, so you can make trades at that time? You can put orders and make trades at that time?
Yes.
Okay.
But of course, volume will be very low. So you may not have the liquidity. Your bid and ask spreads will be too high. If say for example, like Nvidia, it may have like a $3 spread or $2 spread. So you don't know what's the real price of the stock.
Okay.
But you can throw a dart and see, if it is favorable to you and somebody wants to, sell it to you at a lower price, good for you, right?
Yeah, so you were talking about this one stock last week which went earning. I'm forgetting the name. I was following that you and Govind and all were talking on the earnings. I'm forgetting the stock's name. Or was it the one, the Uber one, which went Grubhub? So after hours, it just jumped up. So I was thinking, and then the following day it went higher, but came down because the deal did not go through. But in the pre-market, what was happening, I was interested to know, because if you can catch the momentum there, then you can put the order and take it in the first hour. Especially if you see Lululemon. We are saying retail is not good, but if you see Lululemon, highly fluctuating, but a very solid one.
I mean, the biggest risk is you don't know what is the true price of the stock.
Okay.
Because the volume is so low. Okay. It's called price discovery. Okay. Price discovery is very important, right? You could be overpaying or underpaying. You don't know. But if you're really sure about it, you have the gut feeling, conviction, go for it, right? It's still gamble. But once the market opens, the spreads are very thin and the price volume dictates all the movements. So you have a lot better understanding on which way it's going to move.
Okay.
But for example, if it's a short squeeze stock, okay, heavily shorted stock, and they did great in their earnings, you want to buy it after hours and then maybe hold on to it. But then the conference call starts and they may have some bad news. Then the stock goes down. So it's very tricky, So you got to find the right timing to buy it. So there have been cases like Lyft. I actually listened to the conference call, which, I rarely do. But it helped me because I knew that, stock was going to go up. So I dumped it for a small loss and the stock price went up. And then I waited for it to go up to like 34 or something. And then I started shorter again. So overall, I still made decent money. Cool. All right. Go on to the next one. I won't really go through this one. It's something that, I found interesting. These are all like the top investment gurus, Joel Greenblatt, Charlie Munger, who's with Berkshire Hathaway, Warren Buffett's sidekick, Bruce Bockovich, Warren Buffett himself, David Einhorn, Lou Simpson, Bill Ackman, Tom Murphy, Michael Porter. So they all have certain, checklists for stocks, when to buy, and also it's going to take a while to go through it. So you guys can take a look at it yourself, but, just gives you an additional perspective on how these guys trade. And then the last couple of slides, I just have some abbreviations and jargon so that you guys can take a look at it. Because we tend to use a lot of abbreviations and jargon, and she gets more. Sometimes, it's hard to understand. And a few books that I read in the past, I thought it would be good reads if you guys are interested. That's about it.
Thank you, Suman.
It was solid, man. This session. Really solid.
Thanks, Suman.
Hey, can you post this deck on the Trader Talk chat?
Yeah, I'll post a PDF. And I'm pretty impressed that you guys still got 36 people after almost 3 hours.
You can imagine how many people are interested in making more money, right?
I know. I mean, everybody wants to, but actually spending the time and energy, that is the tricky part, right?
Yeah.
Everyone's hungry for information, and you gave the right information. I think that's what.
Hey, Suman, one thing I noticed is in this presentation that you have, that startup information that you're talking about, Edgar's, right? That site is not
IPO.
Edgar's.
Really? Yeah, just Google, IPO lockup expressions. You'll get a website.
Okay.
Suman, thank you.
Thank you a lot, Suman.
Hey,
Thanks, Suman.
Thank you, Suman.
You guys don't have to do it, but thanks for organizing it. I think it takes your personal